All right. Well, good morning. Welcome, everybody. I will call this meeting to order of our Finance Administration Committee and a special meeting of the Board of Directors. And if our, hold on one sec. Our general manager would please determine if we have a quorum.
Absolutely. I'll start with Director Williams.
Here.
Dr. Gray,
Here.
Director Alvarez, Director Deere, and Director Houston.
Here.
Okay, we have a quorum for the committee and also for the special board meeting.
Perfect. Okay, great. Thank you. Any public comment?
We have no public comments here in the room with us, but I'll turn my attention to the online platform to identify and recognize any visitors who would like to make a public comment. Do so by raising your hand. I do not see any hands raised at this moment. So it appears that we do not have any public comments at this time.
Okay, very good. All right, well then let's move forward into our action calendar.
Okay.
5A.
Yes, and so I'll turn it over to our acting board secretary, Desiree Quintero, to run through this first item, which is the approval of our meeting minutes. Desiree.
Okay. So for our meeting minutes this month, we are presenting to the board for consideration the regular board meeting minutes for November 28th, 2022, regular board meeting minutes for December 19th, 2022, and the special board meeting minutes for December 27th, 2022. So it is recommended that the board approve the minutes for November 28th, December 19th, and December 27th, 2022.
Okay, excellent. Thank you. Any questions or comments from board members? Director Williams?
No, I do not. I would I would recommend that they go forward to the board for approval.
Okay, great. Anything else out there? Director Gray? Hear her. So I would just say that the Director Deere has now joined us, it sounds like. Director Deere, are you there?
Yes, I am. Thank you.
Excellent. Okay, your attendance is noted. And back to the approval of the minutes, I see that the changes were made that were brought up at our last board meeting. And so I think that they're in order to go forward to the board for approval. So I would recommend a yes, as I think Director Williams did. And so we can move on to the next item.
Okay, fantastic. So that takes us to item 5B, which is our community outreach event. And if it is okay with the chair, we could take both items 5B and 5C, both being sponsorships of community events.
Yes, take them together. Yeah.
Okay, so the first one is regarding the Pan.
What page? What page are we on?
I'm sorry, thank you for that. So we're on packet page 19 for the staff report. And this first item is a community outreach event for the Pan-African Film Festival. And this is at the request of Director Gray. This is scheduled for Thursday, February 9th through Monday, February 20th. And the request is to consider a $5,000 sponsorship, which would provide the district with an opportunity for an advertisement and also for a booth to distribute district information. The previous sponsorship for this same event was in 2021-22 in the amount of $5,000. So with that, it appears that this satisfies two of the three criteria. The district booth, item B, advertisement promoting district awareness, item C. So with that, I will read the recommendation. This item, that the board approve the sponsorship requested by Director Gray for the Pan-African Film Festival event to be held on Thursday, February 9th, 2023 through Monday, February 20th, 2023, in the total amount of $5,000.
Okay, so that's item 5B, as in boy, and so it was by itself. So let's just do that one first. So I have no questions. Director Williams is the committee member. Any questions, comments?
No question, comments. I would just, I'm all for forwarding this on to the board for approval.
Okay, excellent. Anybody else? Director Gray,
No, thank you. Thank you very much.
Director Deere, anything?
No, thank you.
Excellent. So I would recommend, yes, it goes forward to the board for approval.
Fantastic. So with that motion being approved, we then go right into the next district sponsorship. This is on packet page 39 for the staff report, and this is for a district sponsorship, which requires it be a water-related event. And in this case, this is the Urban Water Institute 2023 Spring Water Conference and the Water Reuse 2023 Annual Symposium. So with that being said, the first item, which is the UWI conference, we are recommending a sponsorship in the amount of $3,000. In the previous fiscal year, we sponsored the Urban Water Institute at the $2,000 level. So it's a little bit of an increase, but the three levels that are available are the platinum at $5,000, the gold at $4,000, and in this case, the silver at $3,000, which is the recommended amount. For the Water Reuse Annual Symposium, we are recommending sponsorship in the amount of $2,500. In the previous fiscal year, 21-22, we did sponsor at the $5,000 level. So this year, the selections are starting at $15,000 for the winner's circle, going down to $10,000, $7,500, $5,000, which is where we sponsored last fiscal year. And then finally, the advocate level at the $2,500 level, where we're recommending for this fiscal year. So those are the two recommendations. So let me actually read the recommendation here. Item 1, that the board consider item 1, sponsoring the Urban Water Institute 2023 Spring Water Conference to be held Wednesday through Friday, February 22nd through 24th, 2023, in the amount of $3,000. And item 2, sponsoring Reuse Symposium to be held Sunday through Wednesday, March 5th through 8th, 2023, in the amount of $2,500. I'm happy to take any questions.
Great. Thank you, Greg. Any questions? First from our committee member, Director Williams.
No questions. I'm happy that we are considering this, and I would recommend that we send staff's recommendation on to this board. Thank you.
Great. Thank you, Director Williams. Any other questions or comments from Director Gray or Director Deere?
No.
Chair, if you would, this Director Gray.
Sure.
No comment, just relative to item. What item are we on? We're on item.
5C.
We're on C. We're on C.
5C.
And thank you. If I could just make a comment on B, I had to get off the phone and come back. So if the committee is moving that item forward, I believe. So I just want to thank the committee for doing that. I didn't comment on that earlier. So I just wanted to say that. Okay.
Thank you. And we did recommend moving that forward, Director Gray.
All right. Thank you. Thank you so
You're
much,
welcome.
Chair.
Okay, and then I don't think, Director Deere, do you have anything on the current item 5C?
No.
Great, and I
No, thank you.
concur with Director Williams regarding staff's recommendation as is for going forward to the board for approval. So I think we are good on that item. So 5D as in dog.
Yes, so item 5D is the annual board reorganization. And so we have a staff report on package page 54, which outlines the current officer appointments, both among the board as well as among two staff members. It goes forward to say that the recommendation is that the board elects the following 4 board officers to the 2 appointed officers and the 2 appointed officers at the January 23rd, 2023 regular board meeting. And that would be for the board officer positions of president, vice president, treasurer, secretary, and the appointed officers, deputy treasurer and deputy secretary. So with that, I'll open it back to you, Chair.
Thank you, Greg. So obviously we're preparing for our annual reorganization of the board officers. Any questions or comments, Director Williams?
Yes, is this the time that we would make nominations for these positions?
Well, what we're doing is the committee could fill in the list, if you will, and the board will decide at the board meeting. So if you like, you could talk about filling in these blanks if you want.
Actually, we usually do it at the board meeting.
Yeah, I thought so.
This is Director Deere.
The way it usually is the committee that it's on this item, so that's where they can, we can recommend putting it in place, or, and as it goes to the board meeting for the vote, or we can wait till we get to the board meeting and put it on the agenda that way. So, you know, it's up to the
That's the
committee.
the latter is the traditional way of doing this. Let's just do it the same way we always do and have it done
Yeah,
at the board
because
meeting.
I thought that was the way we would do it. We do that at the board meeting, and then we can make nominations at that time. But it would seem a little awkward to make nominations now.
We're not making nominations now.
What's that?
We're not making nominations now. Your committee is just suggesting to the board that we fill the offices. That's all.
Well, if that is the recommendation, I would recommend that we fill the offices, but not with the individuals now. But we do that at the board meeting on the, what is that? What day is that? The 23rd?
Correct.
Okay, that's
Okay.
what I would recommend, that we do this at the board meeting.
Correct. Which that's what it was gonna be, Director Williams. It's just a matter of if anybody put the names on here or not. And I've asked our staff to leave it blank, as it's been done both ways over the years I've seen. So at this point, we'll just leave it as is. If you see on the current board packet, the slate of officers. A really loud motorcycle. The slate of officers is not filled in at this time. So if that's the pleasure of the committee, and I agree, we can just move it forward to the board as is.
Yes, I would recommend that we do that.
Great. So any other questions or comments from my colleagues? Okay. All right, so staff will just move it the way it is, and then we'll have that discussion on Monday.
Okay, very good.
Excellent. Thank you.
Thank you. So that takes us to action calendar item E for our resolution of the swap termination. And I'm happy to have our Executive Manager of Finance, Margaret Mosier, here to introduce our swap advisor and our finance advisor, our bond counsel. I'm sorry,
Our financial advisor are here today in our.
financial advisor,
It's on the line.
PFM. and our swap advisor. So please, Margaret, sorry for butchering all of that.
No, that's all right. Well, good afternoon, not quite good afternoon. Thank you for this opportunity to share with you this opportunity that is before us and is something for the board to consider. Certainly as we look at the market conditions today, we've seen a sharp increase on the short-term overnight rates, which is relevant to us in the consideration as it relates to how this swap is handled and how the mark-to-market has changed over the course of the year. So to give you an opportunity to kind of hear more about what the swap has done, why we put it in place, and to see what the opportunity is in front of us today to consider, we have PFM here to make a presentation as to the swap termination. And we do have Stradling, Doug Brown is online to then go through the resolution to the board want to consider what that could mean for us as an opportunity. With that, we are on page 56 of the board packet. It does sort of outline, if you will, the main points that's there, but it is covered in the presentation. And that presentation is shown beginning on page 60 of your packet. So if you would please turn there, we can then turn it over to Darren Hodge, Director with PFM, to then take us through this presentation. We will be available to answer questions. Once we have that taken care of, I will then introduce Doug Brown to then bring you through the resolution. And then we can then take it back to myself to then read the formal recommendation to the board, to the committee for their consideration. With that, if you're okay, I'll turn it over to Darren.
Very good. Go ahead.
Good morning. Thank you, directors, for allowing me to present this morning. As Margaret mentioned, I'm on packet page 61. And so as I go through this, if you have any questions, please feel free just to let me know. I'm happy to stop and answer any questions or clarify any points that you wish. So on packet page 61, what this does is this presents an overview of what we're going to call the swap. And what is a swap? We've got details in the next slide, but before we jump into the history, I just want to kind of talk about what a swap is typically used for. So a swap is a synthetic fixed rate product that is typically integrated with a variable rate bond so that the overall cash flows try to mimic a fixed rate deal. So that's kind of at a high level. Now, the overview of our swap, let's start with the history. So the swap that we have in place right now was first put in place in 2004. And as I mentioned, typically how a swap's integrated with a underlying variable rate bond transaction, that's what occurred here. So in 2004, we sold auction rate securities. The swap was put in place. It was wrapped around those bonds to create a synthetic fixed rate. In 2008, the auction rate market became dislocated. So we refunded the auction rate securities with variable rate bonds. Then in 2014, we refunded those variable rate bonds with a revolving line of credit. And then in 2016, we sold long-term fixed rate bonds to essentially fix out the floating rate obligations. So that's important, and we'll get back to that on the next slide. But that's kind of the history behind where we are right now. And in terms of the details of the swap, if you look on this slide, we've got kind of the description of what are the overall cash flows, how much is outstanding. Originally, the swap notional, the amount of the swap outstanding was about $21 million. Currently, we have about 6.7 of that outstanding, and the swap matures or expires in 2027. Now, in terms of the swap cash flows, what the swap agreement essentially with Citibank details is that we will pay them a fixed rate of 3.66%. In return, they will pay us a variable rate equal to 65% of 1 month LIBOR. The reason that we use 65% of 1 month LIBOR is that LIBOR is a taxable index. We're selling tax exempt bonds. And so the practice is typically you're going to set that percentage of a taxable ratio to between 65 and 70% because of the tax exemption. And so we're trying to get that 65% of LIBOR to be as close as possible to the underlying variable rate we're paying on the bonds, which then segues into the next slide on packet page 62. So this is where we're outlining the cash flows. So what I just talked about was kind of theoretical. On paper, this is what it looks like. And so on the left, what we have is historically, these were the cash flows associated with the swap until we issued fixed rate bonds. And on the right, that's kind of the cash flows after the fixed rate bonds. So I'm going to focus on the left for the time being. So the swap part of this, what we're talking about is encompassed within that dash green line. And what we have is we have an agreement that West Basin entered into with Citibank, the swap counterparty. And as I mentioned, you'll see that arrow from West Basin to Citibank, we are paying them 3.66%. In return, what Citibank is paying us is 65% of 1 month LIBOR. That's the swap. Then up until 2016, we had a variable rate obligation, and we had bondholders or a lender that we had to make variable rate payments to. And the hope is that that 65% of 1 month LIBOR, in a hypothetical perfect world, it would exactly equal that variable interest rate. So those two would essentially net each other out, and we would be left with a fixed rate that we're paying of 3.66%. That's kind of through 2016. That was the structure of the overall obligation. In 2016, we issued fixed rate bonds. And so essentially what we were left with at that point is then we still had the swap outstanding, but we didn't have a variable rate payment that we were making on a specific obligation. And so up until now, we are making the payment of 3.66% to Citibank, and in return, we are still receiving 65% of 1 month LIBOR. And one of the questions you might have is, you know, in 2016, when we fixed out those bonds, why didn't we unwind the swap? And part of the reason was because at that point in time, the cost to unwind that swap was fairly expensive. If I remember correctly, about $2.5 million. And so the decision was made to keep that outstanding rather than make the payment at that time. Slide 60 or packet page 63. This is where I want to present the history of LIBOR. And the reason that this is important is because LIBOR is the ratio of the index that we are receiving from the swap counterparty. And so essentially, the higher LIBOR is, the greater the payment that we're receiving is. And conversely, when LIBOR is low, we're receiving less. And so when you look at the history of LIBOR from 2009 till about 2016, LIBOR was very, very low, meaning we weren't receiving much from our swap counterparty. But then the Fed started instituting rate hikes. And so with that, LIBOR increased up until roughly the pandemic. During the pandemic, what the Fed did was they cut the Fed funds rate, reducing LIBOR for the last 2 years. So for the last 2 years, we were receiving a very small payment from our counterparty. Over the last 12 months, the Fed has started instituting pretty dramatic rate hikes, about 4.25% over the last 12 months. What that has done, that has increased LIBOR. So now we're receiving more back from the counterparty. Now let's turn to slide 64. So that's some important background that'll make sense when we kind of talk about some of the analyses we read. On packet page 64, what we're now comparing is the termination cost of the swap. So if we are to terminate today, what we have to do is we have to make a payment to the swap counterparty in order to get out of this transaction. The swap mark to market is essentially calculated as a present value of the future projected swap cash flows. So there's a forward curve that's taken into account of what the market thinks LIBOR is going to be through the duration of our swap. We calculate the cash flows, we discount those back. The number that comes back to, that's the payment. That's what we call the mark to market. Now, in general, when long-term rates increase, the cost of the termination is going to go down. And inversely, when long-term rates decrease, the cost to us of the swap unwind is going to increase. Why is that important? Well, if you look at this chart right now, that kind of gets to the point of where we're at right now. This green line represents where LIBOR rates currently are and the history of them over the last 12 months. So what you can see is that over the last 12 months, as LIBOR has increased, these blue dots representing the cost to us to terminate the swap, that has decreased. And it leads to right now where the cost to unwind is about $160,000 to $180,000. So pretty low compared to what it's been in other times in the past. The other thing that we want to make sure to keep into account is that there's other fees associated with this swap. There are accounting and maintenance fees, which we're estimating are about $13,000 a year. And so those are all part of the cost of maintaining the swap to the district. Packet page 65 now. So all of that's important context because one of the things that we wanted to do is calculate out under various scenarios, what might be the net expected cash flows of this swap compared to the cost to unwind it today. And The reason that's important is because the cash flows to the district for the swap are highly dependent on what LIBOR is in the future. I can't predict what LIBOR is going to be. None of us can, but we can put ranges in place to get an idea of what's the impact on the cash flows under these various scenarios. So we ran 3 scenarios. The first one is called what we're referring to as the base case. The base case effectively LIBOR rates as of December 16th. So what that says is the day that we calculated the swap unwind, where does the market think LIBOR is going to be through 2028, right? The second, what we did is we then said, okay, what if rates go down? So if 1 month LIBOR decreases from where it is today, what would that look like? And so we took the average 1 month LIBOR since 2004, since the swap was outstanding. That rate was lower than the base case. Then we looked at a higher range. What if current 1 month LIBOR remained flat from today through duration of the swap? What would that look like? And that's our scenario we're calling higher rates. And so essentially, what it shows is that under the base case, using a swap unwind cost of approximately $231,000, and that's an all-in cost. So that's the payment to the counterparty, that's the spread, et cetera, everything all in there. Under the base case, we would estimate that under these assumptions for future LIBOR rates, that the net expected cost to the district, or the benefit in this case, would be about $2,000. So effectively, under this scenario, it'd be roughly break even. Now, if we look to a situation where 1 month LIBOR rates are actually lower, that obviously becomes a benefit to the district, because if we go back to one of the prior slides, you remember lower LIBOR means we're receiving less from the counterparty, so it's less economic to us. And so if rates are lower and we terminate it today, all in, we would expect that to be a slightly better transaction for us. And under this scenario, about $263,000 better. Now, the opposite end of that is, what if rates end up being higher? And again, if rates are higher, if LIBOR is higher, that means we're receiving more from the counterparty. So it's more beneficial to us to have the swap outstanding. Under that scenario, if we were to terminate today and LIBOR remained higher, then roughly that would cost us about $50,000 over the life of the transaction. So this kind of gives you a scale of what we're talking about in terms of sensitivity and the considerations. Before I go on, any questions there?
Any questions at all at this time?
No, thank you.
If I could add in just a moment here, one of the consideration is when we're taking a look at these cost sets here, I should comment that we would never want to say that these are savings to us. That you'll hear that it's an unwind situation, and is it risky to us? Is it going to cause us any additional cash flow in the future? And so what we're seeing is that we are in a better situation to consider of sort of removing future cash flows by addressing it today, or we can leave it outstanding. There, from a rating perspective, we have never been sort of commented on that this could be a as a credit negative. It's just sort of just out there. So I wanted you to be aware that it's not that we're not trying to do anything other than perhaps simplify sort of our debt portfolio that's out there. And so that's why we're looking at it today, because there is going to be something we will pay to get out of it. But the question is are we paying a lower number today than we could be possibly paying if we just wait for the duration of it outstanding? And that's the sort of the bookends, if you see here, that we could find ourselves where in the first case, in the base case, it should be sort of net zero, because that's you're assuming that the market's going to behave the way it's supposed to behave. However, the other two are really giving you the bookends of where we could be if the markets go higher or lower. And so we just wanted to share that perspective to you. So before we get into sort of the next discussion, which is what does it take to unwind, I wanted to make sure you understood that from a staff perspective, we were noticing that the mark to market that we report to on a quarterly basis has significantly declined. And you can see that on page 64, where it's gone from 675,000 down to, as Darren said, between a range of 163 to like 180. So it kind of pops around depending upon the market. And so we wanted just to make you aware of it, because we will continue to, manage the swap as we have been doing so. But this gives us an opportunity here that we have not seen in more recent years. certainly better than the 2.2 that we saw back in 2016.
I don't hear any other questions, so we'll go ahead.
Okay.
Thank you.
So on packet page 26, I'm going to turn it over to my colleague, George Hu, who is part of PFM Swap Advisors. If we are to unwind the swap, what George is going to walk through is what are the steps that are necessary to effectuate that termination.
And George is online.
Good morning, everyone. Good afternoon, everyone. So first law, the swap counterparty, Citibank, would need to see evidence that the district has been authorized to terminate the swap. So in the form of an board authorizing resolution, that should suffice as evidence. And then, we would work with Citibank to make sure that all the regulatory documents in place. There are documents that, for example, to address the Dodd-Frank Act that was put in place almost a decade ago now, that Citibank and the district will have to comply with prior to terminating the swap. We would then tie out with Citibank on the termination value. For each swap termination, generally there are two components. One is the theoretical mid-market value, and that's the value without any transaction costs. And then there's the trading spread. That trading spread includes generally the counterparties' hedging costs, their documentation costs, legal costs, etc. And would be our job to negotiate on behalf of the district. And then, we would monitor the termination amount. That the termination amount, some of you might know, varies second by second, according to where long-term interest rates are going in the market. So we will monitor that closely to make sure that, we're not exceeding the authorized amount to terminate the swap. If the amount, stays comfortably within a level that we deem as appropriate for the district, then we would schedule a pricing call. On the pricing call, PFM, again, and Citibank would update the swap termination value according to the market. And if the numbers match, then we will make the recommendation to the district to lock in the termination amount. And all we have to do afterwards is execute a formal swap termination document to make sure that we document the swap termination, and then generally 2 days after the swap termination call is when the swap termination payment is due. In the current interest rate environment, the district will owe a termination payment to the bank, Citibank. So we would make the payment if interest rates, let's say, rise dramatically from now until the time when we terminate. There could be potentially a receipt from the bank to us. So that's generally the process. Any questions?
I have no questions. Any questions, Director Williams?
No, I'd just like to make a comment that I'm sure glad we have the right people in place, because this swap thing gets more confusing all the time.
Yeah, absolutely. We're hopefully, our role is to demystify and provide analysis along the way, provide clarity to everyone.
Well, thank you.
On page 67, let's just quickly talk through the benefits and the considerations. So why would we want to do this? What are the benefits to us? But also, just as important, what are the considerations here? So on the benefit, as Margaret mentioned, one of the key benefits is simplifying the debt portfolio. And really that's going to be because we're going to be eliminating the swap counterparty and LIBOR exposure. So volatility in LIBOR rates, volatility against the bank's credit, et cetera. So we simplify our debt portfolio. The second, as I mentioned, we have about $13,000 a year in accounting and swap accounting fees, very important distinction. And so we would eliminate that. So we would save $13,000 a year from that expense. And the third is that we're eliminating the accounting requirements associated with the swap. So that's reduced time on staff, accounting staff, et cetera, related to the swap. Now the consideration, perhaps just equally as important. In today's market, we would have to make a payment to the swap counterparty. As George mentioned, if rates go up pretty dramatically, there is a possibility we receive a payment, but in today's market, we would be making a payment to the swap counterparty. The other consideration is if you have a view on interest rates in the future. As I mentioned earlier, if rates are high, if LIBOR rates are high, we're receiving more from the counterparty. Right now, LIBOR rates are decently high. It's about 4.3%, when we ran these numbers. It's expected that the Fed's going to keep the Fed funds rate pretty stable, maybe increase it 25 to 50 basis points in February. But for the rest of the year, most of the forecasts show relative stability. If we enter a recession, then at that point, what you might see is the Fed start to cut rates. As the Fed cuts rates, then the LIBOR rate should follow pretty closely to that. So that should decrease the LIBOR rate. No one can predict that, but just kind of something to think about as a consideration as to the swap termination in the future of the swap. So to end this, one of the things I also want to talk about is, as Margaret mentioned, we're under no obligation to terminate the swap. This is at the option of the district. But one thing that we will need to address if the swap is outstanding is that as of June 30th, there is a transition away from the LIBOR index rate. And George can talk a little bit more about why that is and kind of what the process would entail to address that transition.
Sure. So some of you might be aware that the LIBOR scandal came into light in the 2012 to 2013 period when we found out that there was some perhaps collusion or some of the traders were not forthcoming in providing their LIBOR indications. So all of that culminated in the UK Financial Conduct Authority announcing on March 5th, 2021, that all of the settings of LIBOR will be discontinued in some day in the future. Some of the maturities some of the settings have already discontinued. For example, the 1 week and 2 month USD LIBOR, they stopped being published as of last year. Sorry, as of the end of 2021. And all the other tenors, including the 1 month LIBOR, which is relevant to the swap transaction at hand, will either cease to be published or become non-representative after June 30th, 2023. In each case, LIBOR as a interest rate will not be used for purposes of calculating interest rate payments on swaps. So ISDA, that's the governing body, International Swaps and Derivatives Association, that governs swap documents and swap transactions. They have come up with a fallback protocol. That protocol provides a fallback rate to 1 month LIBOR. What it essentially does, if both parties adhere to that protocol after June 30th, 2023, we will have a SOFR-based rate to replace 1 month LIBOR. And that rate will be compounded overnight SOFR plus 11 basis points or so. Whatever percentage that we have, for example, in our swap, we have 65% of 1 month LIBOR, then 65% will be applied to that SOFR-based rate plus that spread. So all the process entails that we would need to go onto the ISDA website to fill out a form to adhere to the protocol, and there is a fee, a $500 fee associated with submitting that adherence letter on the website.
And so as essentially, as by June 30th of this year, we will need to do something to address the LIBOR index of the swap. If we end up terminating the swap, then inherently we have dealt with that issue. But recognizing we don't have to terminate the swap, we wanted a fallback to make sure that we could address LIBOR going away essentially. And so that is what the other element of the resolution provides to allow for that transition.
So with that, I wanted just to maybe introduce Doug Brown, who's also on screen with us, to go over the resolution that is on page 71 of your packet. That is 01231184. And with that, I'll turn it over to you, Doug, to highlight the key points of the resolution.
Great, thank you. Directors, appreciate the opportunity to present to you today. If the decision is to advance to the board this item, the resolution that the board would consider is attached. There's a number of whereas clauses which describe a little bit of the history, which you have already heard. The main portions of the resolution are in the numbered paragraphs. Paragraph number 1 would authorize the president, vice president, general manager, or your executive manager of finance to execute a swap termination. But that would be on 2 conditions. 1, that the swap counterparty payment not exceed $230,000, and that the total cost of termination not exceed $250,000. The difference between those 2 numbers is the fees that you would be paying your own consultants to accomplish the swap termination. The second paragraph follows up on what George was just describing. If by June 30, the swap has not been terminated, you're authorizing your staff to sign the protocol to convert the interest rate from LIBOR to SOFR. And that's on the condition that that cost not exceed $1,000. As George indicated, really the only cost to do that is going to be that $500 fee you pay when you opt in. Paragraph 3 engages PFM swap advisors as your swap advisor. That's a formality that needs to be done in order to have them represent you in the swap termination negotiations. And then paragraph number 4 authorizes your staff generally and your board president and vice president to sign other documents. As those of you who've been through financings know, there will be a variety of certificates and instructions that need to be signed. So this is a general authorization to sign those sort of ancillary documents. So adoption of this resolution authorizes but does not require staff to do the termination. And as I said, it does put a limitation on the amount of the swap termination payment that can be made. So happy to answer any questions you might have.
Very good. Did you read the full recommendation?
No, I was gonna-
Usually-
no, I have not. I was going to read that at this point if you're ready for that.
Yeah, let's go ahead and read the recommendation, then we can.
And before I do so, I just wanted to clarify, so in order to do the swap termination, if that is decision by the board, we do need to enter in a separate agreement with PFM Swap Advisors, which is the group that George represents. And so that is part of the action today, and the fee associated with that is $20,000. So just wanted to share that before I get to the recommendation, so you understand where that comes from. So the recommendation, as shown on page 59 of the packet, says that the board approve resolution number 01-23-1184, resolution of the West Basin Municipal Water District authorizing the termination of an interest rate swap transaction and approving the execution and delivery of certain documents in connection therewith and certain other matters, and an agreement with PFM Swap Advisors for $20,000 to effect the termination of the City Bank swap. With that, I'd be happy to answer any additional questions as well.
Excellent, thank you. Any questions? I'll start with Director William.
Yes, thank you very much. I'd like to know from the general manager if he's totally in supportive of this and he is in step and understands this.
Thank you for that question, Director Williams. And yes, I am supportive of the recommendation here. I think there's a very great opportune moment with interest rates on the Fed funds going up to where our opportunity to unwind this swap has become more cost effective. And so placing the authority with our executive manager of finance to execute the swap termination, I believe is prudent for the district. And I really appreciate Darren, Louise, and George's presentation today and the simple kind of explanations to help us, those of us who are not finance experts, to have a better understanding of how this finance tool works and why this is such an opportune moment. So I think I have a appropriate understanding, not being a financial advisor, and the reasons why I support this.
Okay, well, thank you. That's it for me for now.
Great, thank you. Anybody else? Director Deere or Gray?
No, thank you.
Just comment, it is very confusing trying to understand that whole process, but, I do have faith and confident in our chief financial officer, and I heard what the general manager said, and thank you for the other who made the presentation today, so I certainly support it. I mean, I'm not on the committee, but I support the recommendation.
Okay, Director Deere, anything?
I agree with Director Green.
I think my only comment or just clarification, and I understand the resolution, is it does provide parameters. So basically, we will, if the board approved this, we would authorize you to terminate the swap. But if it meets certain parameters, right, that's clearly indicated here.
So if it came in at $250,001, we would not be able to move forward. So we would need to make sure that it stays within the $250,000 amount. And again, 20,000 of it is going towards the swap advisor for their role into making sure that the steps that George has outlined is all taken care of, and that we're doing everything from the regulatory perspective as well as negotiating and monitoring the market to see where it is. And so the amount to the counterparty is 230,000. So today, or as of December, I should say, it was at 168,000. We don't know what the market's going to do from day to day. So we wanted to create some flexibility there, because if the desire is to simplify our debt portfolio, and see where it is, that we can certainly do that. But again, this is an opportunity that's in front of you. And again, if you execute on the resolution, we see that we are within that, we will execute on it. So.
Very good. So if it was to go to the board and it gets approved next week, which is Monday, how quickly do things start happening? Because you got to sign a lot of paperwork and some other things, and then you all are going to monitor the market to figure out when's the time to pull the trigger. So can you just give us a very brief synopsis of the timing?
Yeah, absolutely. And actually, if we can turn back to packet page 66, those are really the steps that outline the process we would take. But George, maybe you can kind of talk to how quickly you could get started once the board approves the resolution. At that point, assuming it is within the parameters, then the discussions with Citibank and everything would proceed fairly quickly. George, do you want to add some more detail to that?
Yeah, that's correct. I think one of the most time consuming parts will be to address the regulatory documents. Dodd-Frank protocols, it takes a little bit of time. We might need to update our registration with the CFTC, fill out bilateral Dodd-Frank agreements. Those will be reviewed. We'll need to fill them out, and the city will need to review as well. And then there's that negotiation process that could happen in parallel with addressing the regulatory documents. All in all, I would estimate a total of 2 to 4 weeks.
Okay, so it's pretty quick.
Correct.
So certainly by FNA in February, there could be an update, maybe at the February board meeting again. And it may not happen then, but it could happen as quickly as that. And we could then, provide those updates as appropriate.
I guess my last comment or question combo would be that, basically we're authorizing you to look at these options. Of course, if the numbers fall in that parameter, we give you the authority to act, right? Obviously, if they don't, then you have authority, I guess, to wait a handful of months.
And there is no end date to the resolution. So if it happens 6 months from now or a year from now, that certainly is something that's out there to be monitored. But it is most likely to happen relatively soon, knowing that the Fed is going to consider some additional rate hikes, that we could still see some more positive movement, if you will. Again, not necessarily savings, but more positive movement, if you will, and lowering, if you will, what the swap payment could be.
Perfect. That was the other part of this, is that if it doesn't happen as quickly, there's no end date on it, that you could look at it down the road when those numbers made sense.
That's right. If it doesn't happen, then if we don't unwind, then it basically just stays outstanding until it terminates in 27. The only thing that would happen in the interim is that by June 30, we would execute those fallback protocols to convert LIBOR to SOFR. But there's nothing forcing you to unwind if it doesn't fit within the parameters.
Very good. Excellent. All right, one last time. Any other questions? Hear any? So I concur with Director Williams that this recommendation should go forward to the board from this committee of with approval for a yes vote. So with that, I want to say thank you to everyone. It is complicated. We do appreciate the fact that you all are experts in the field. So and we're relying on you to make good decisions on behalf of the agency. So we do appreciate that. Very much so. Again, more to come. It'll go to the board, and you know, the decision will be there. All right. Thank you.
Yeah, and I want to just also say thank you to Darren and your team for being here in person with our committee and making a really great presentation. Thank you so much.
We'll see you Monday.
Absolutely.
Thank you. Let me get my papers here. Okay. Now we're going to go to the next item, which is item F. This is Frank.
Yes, so this is action calendar on our annual review of financial policies. And so we're fortunate to have our manager of finance, Marianne, with our exceptional accountants who will provide the report to the committee. So please, Marianne.
I can share just beforehand. We wanted to expand the opportunities for our staff to get involved. And so while Marianne, I certainly can help with them, we're grooming them into sort of doing this. So you certainly have seen Allison present before, but this is Sandra's first time presenting. So I just wanted to welcome them and thank them for agreeing to be part of the process.
Thank you. Welcome.
Thank you, Greg. Thank you, Margaret. And I just want to comment also, these ladies do so much of the work in the background, and we want to make sure that they also get some recognition for what they do. So we're going to have each help out in some of this discussion this morning. But this item starts on page 73. It's agenda 5F, resolutions annual review of financial policies. And happy to say much less complicated from what you just heard in the last item. So starting off on page 73, just as a reminder, we do maintain our financial policies within our admin code, in particular part 4, chapter 1. And as required by our policies, we do review them on a periodic basis. For many reasons. One, there could be changes in federal or state laws, also provides us some flexibility if we see the need to. And also we want to make sure we safeguard our assets. So we go through each of these policies. We do ask our consultants such as PFM, as well as Stradling, our Chandler, our investment manager, also to review the policies with us and help us with these recommendations. This year, we did review 5 of the policies, which includes our small and community bank investment program policy, the investment policy, the debt management policy, disclosure procedure policy, and our swap policy. And also just to note, we did ask our district council to prepare resolutions for each one of these policy changes or recommended policy changes, and we'll go through those with you within the packet. So I'm going to start off with the small and community bank investment program, and then I'm going to ask both Allison and Sandra to take over on the other items.
I'll interrupt you for 1 second. So I know that we have the posted agenda, but then there was like a supplemental delivered with this yesterday. So which one are you going to be following?
So
The handout was still on the red line.
right. So basically the one that you have on your desk, the handout. And really, I wanted to simplify what was in the packet. It was kind of confusing to follow that. So we simplified that. Hopefully, when we go through this, you'll see what I mean.
Okay, very good. So we're following this packet, right?
Yeah, I don't know if the page numbering would be.
I know page numbers on it, but I want to make sure that's what we're watching, right? Okay, so hopefully my colleagues heard that. So that supplemental packet you received that has no page numbers, that's what we're following. We're not following anything in this numbered agenda, okay?
Do my best to kind of explain where we are since there aren't any page numbers.
Okay, great. Go ahead.
All right, so the Small and Community Bank Investment Program, as you may recall, we revisited this program as recently as in October, and we had shared some ideas on how we can get better participation from the different small community banks within our service area. So with those recommendations that we had discussed back in October, we've incorporated those for your consideration into the policy. So I'll just start off. There is a resolution, as I mentioned, that was prepared by District Council. For me, it starts on page 76. Of course, you don't have a page number, but it would be resolution 01-23-1183. This one is in particular for the small and local business. Sorry, that title is wrong. My apologies. We'll have to get that corrected. This should be the Small and Community Investment Program. So there were 3 changes that were recommended during that committee meeting we had. The first one, it was on section 4-1.301, which is in section 2. And this was to look at reducing the amount that we would invest in each bank. If you recall, we had originally in our policy $2 million, up to $2 million in each of the banks, with a total program of 10 million or 10% of our portfolio. After our discussions in October, we felt like it was better for us to reduce the amount that we would invest in each bank down to 1.5 million. In addition, we also thought based on what's happening in our portfolio, and we would put a lower limit of 7 million was suggested on the overall program limit. So that's included on 4-1.301, and that's been incorporated into that. In addition, the second item that we discussed at the committee was having the removal of the interest rate requirement. If you recall, there were a number of occasions where staff had to bring back a recommendation for us to for the board to allow us to negotiate with the bank for a rate less than what was required in the policy. As we explained with the changing market, it was very difficult for us to get many of the banks to be able to meet what we had in our policy. So we felt like it was probably best to remove that and allow our deputy treasurer, Margaret, to negotiate with each of the banks based on the market conditions at the time. So that way we wouldn't have to come back to the board every time that they were not able to meet it. So that was one of the other recommendations which we included. And that item was on 4-1.301. So we struck that. The last item on this particular policy that we did address was to add language, and this was to require staff to present to the board all the community involvement reports. Because if you recall, when we changed the program to simplify it about a year or 2 years ago, we put in a limit on the dollar amount where they were required to come and meet with the board. And so we felt like we weren't sharing enough information. So what staff has included is language that we would on an annual basis, each 12 months, bring you a report that says these are the banks that we have in the program. This is their community involvement. So we added that as well to this policy, and that's on 4-1.301 section 3. So those are the 3 items on that particular policy. So I'll pause there to see if you have any questions.
Great. Any questions on that, Director Williams?
No, thank you.
Let's go ahead and move to the next one. And
Okay.
following right along, by the way, in these packets. So.
Apologize.
Figured out how it works. Okay.
So for the investment policy, I'm going to hand it over to my colleague, Sandra.
His phone's ringing. Okay, go ahead.
Good afternoon, directors. Today I will bring you the updates to the investment policy. As Marianne mentioned, we worked in conjunction with our investment manager, Chandler Asset Management, and these are the following recommendations. If I could ask you to go to page 112 of the board package. I'm not sure.
It would be item 4-1.209. We're starting off at.
Right, and that's letter N. What we
So, hold on. The which page?
the board packet would be 112.
112? Okay, let me go to 112.
I think you said 4-17 is the printed page number.
The item number is 4-1.209N is the section of the policy.
Okay, 4-1.209. Okay, got it.
And then you're referring to letter N, and what we did was we added a title to that section. The Joint Powers Authority Pool was added. The section speaks about local government investment pools, and we just thought it was prudent to add a title to that section. The next change is on page 116 of the board packet, section 4-1.221. And what we did, we added new definition, letter F. We added security. Callable security gives the issuer the option to call it from the investment prior to its maturity. We've had that happen in the past, especially with corporate notes. So we thought. Next change is on the same page, 116, section 4-1.221. And what we did is we removed the definition of derivatives. Nowhere else in the policy do we speak about derivatives, but we thought it would be best just to remove it from the definitions. The last change we made, what you will find on page 117 of the board packet, and that is section 4-1.221, letter P, as in Peter. What we did is we added the definition of duration. Duration measures the price sensitivity of a security to changes in interest rates. Those were the recommended changes. I don't know, Marianne, you have anything to add?
No, but I did want to point out that for the debt management policy, we did review that policy and we didn't have any recommended changes for that, but we did include within the packet the policy itself, just as a reminder of what that policy is, but we didn't have any recommended debt management policy. That brings us to the disclosure procedure policy, and Allison Tong is going to present on that item.
Good afternoon again, directors. If you're looking at your board packet, I'll be starting at your packet page 152, which is the red line version for resolution number 01-23-1186. Disclosure procedure policy. The first thing we'd like to highlight is the language and required periodic review of this policy. A lot of our other policies already have similar language, and we thought it was pretty to add this in. I'd like to use page 105 of your board packet. You will see that we removed the term official statement already defined earlier on packet page 1. It's just redundant, and so we're removing that language. And last, we have you all turn to packet page
160. Okay.
Here we're just updating the acronym from CAFR to AFR. So that's a pretty minor change from this page. And this has been reviewed by our law counsel. Any questions here?
Any questions, Director Williams?
No, thank you.
We'll move on to the swap policy. On your packet page, one change here, which is to remove the language pertaining to initial deposit.
Item F, I think.
Yes.
Those are all the policy changes, recommendations that staff has. We'd be happy to answer any questions. Otherwise, I can go ahead and read the board recommendation.
Let's go ahead and read the recommendation first.
Okay.
Thank you.
That the board approves, adopts, and authorizes the president to sign resolution number 01-23-1183, a resolution of the Board of Directors of West Basin Municipal Water District amending resolution number 01-16-1024 Administrative Code as it relates to the Small and Community Bank Program. And B, resolution number 01-23-1185, a resolution of the Board of Directors of West Basin Municipal Water District amending resolution number 01-16-1024 Administrative Code regarding investment policy. Item C, resolution number 01-23-1186, a resolution of the Board of Directors of West Basin Municipal Water District amending resolution number 01-16-1024 of the Administrative Code regarding disclosure procedure policy. And last, item D, resolution number 01-23-1187, a resolution of the Board of Directors of West Basin Municipal Water District amending resolution number 01-16-1024 Administrative Code regarding swap policy.
Okay, thank you very much for going through that. Director Williams, do you have any questions or comments?
No, I just want to, well, I guess I do have a question.
Okay, go
My
ahead.
question is to the general manager, to know that he and the finance director are in lockstep with this.
Thank you for that question, Director Williams. And yes, I am supportive of the staff recommendations here. And just as an added component of information, the executive manager of finance and the finance team before you today met with me to review all of the changes and actually the various provisions of each policy, whether they were changed or not, to give me kind of a bit more of an understanding of these particular policies. And so having that briefing ahead of today's meeting gives me the assurance that what we're doing today is appropriate for the board to consider and approve.
Thank you.
Okay, thank you, Director Williams. Any other questions or comments from Directors Gray or Gear?
Not at this time.
Thank you, and thank you, Director Williams. I would have probably asked that same question. You beat me to it. So the general manager is comfortable with these recommendations, and I think you said that our was it bond counsel? Is that what I heard?
Bond counsel has reviewed several of them. Our investment policy has been reviewed by our investment manager, which is Chandler, and then PFM has also reviewed our debt swap and disclosure policy as well. So we also have our third-party perspective, looking at that and making sure that we're adhering to regulations, best practices, and making sure there's consistency in language across the policies itself.
And I will note that you made those changes we have discussed regarding the community banking program as well, and to give you all some more flexibility. So I'm glad you've integrated that into this, and we continue to adjust as we go, if you will. So I'm okay with these changes, and I think I heard, well, I don't know if I heard Director Williams. What's your pleasure?
I think this should go forward to the full board for approval.
Excellent. Okay, thank you, and I concur. So with that, this will move on to the board agenda. Let's go to item, and before I, hold on one second. So we're still on action calendar, correct?
Let's see, so we
Not the information calendar yet.
And
just
two more
before
items
that.
under action.
we have item G and item H on the action calendar.
Okay, so let's go ahead with item G. Yes, go ahead.
Okay, great. And so item G, I believe, is an item of great interest to our board as we've had discussions about this very topic of conducting a cost of service study. And so I'm happy to have our Manager of Finance, Mary Ann, to provide a presentation and the recommendation of award for this particular contract.
Thank you,
Mary Ann.
Greg. Good afternoon again, directors. I'm on page 187, item 5G of your packet, the award agreement of cost of service consultant. And we do have a presentation ready for you, but I'm just going to say a few words and then we can get into the presentation. So just wanted to remind everyone that West Basin derives the majority of its revenues through its water sales, both potable and the recycled sales. And, you know, we've noted through the number of years that we've been in drought, our sales are reducing on the potable side. On the recycled water sales, we do have negotiations that are coming up with our refinery customers. And so we're in a unique situation. I think it's a very good situation for us to take a step back and look at how we allocate all our costs. Are we doing them per, you know, what the industry does? Are we following best practices? We do have, like I said, these allocations that we do internally, but it's also nice to have a third party perspective. And so I think we felt this was a good opportunity for us to bring this item to the board for your consideration. There, I'd like to turn your attention to the presentation, which starts on page 191 of your packet. And it'll be a little bit of a tag team. I'm going to talk about it. I know Margaret will probably pepper in some comments along the way, so you don't just hear my voice the whole time. All right, so on page 192 of your packet, you're probably wondering, okay, why are we doing this? Well, our key objective is so that we have a consultant prepare a standardized cost of service study. And we want to see that we're following, as I mentioned, industry practices and that we're classifying all of our costs correctly between our potable and our recycled customers. So what does that include? Well, we had 4 tasks that we had included within the RFP. And you'll see the 4 of them laid out there on page 192 at the bottom. And I'm going to go through each one of these in the following pages. So if I could ask you to direct your attention to page 193, and this will be the first task, which is cost allocation methodology. So the first task, we're asking the consultant to review both the potable and the recycled water and how we allocate our direct or indirect costs between these two cost centers, if you will. We also want them to evaluate how our methodology, our current methodology of allocating the costs, not only between the 2 types of water, but also between our capital program and our operating program. And of course, if they see recommendations on how to better do this, you know, this would be a great opportunity for them to do that at that time. And we're asking them for that. Number 3 would also for them to review how we currently allocate our overhead costs, which includes not only our benefits, but our indirect labor. And that's important because we do have certain formulas that we've been using, as I mentioned, for a number of years. But again, we want to make sure that those are logical and they support how our current practices are. So we're asking them to do that item as well. And number 4 on that page under our cost allocation methodology is to provide a report of the analysis and the methodology and to provide a recommendation if they do have alternate methods that they think would be best for the district to incorporate. Included with that, we were asking them to have a workshop with staff to go through these changes and their recommendations so we have a better understanding of what is being considered here. So that's task 1. I'll just pause there to see if there's any questions under task 1.
Question? Go ahead.
All right, thank you. So task 2, so we talked about costs under task 1. Cost 2 is really looking at our rates and the revenues that are generated from those rates. So the first thing we want the consultant to do is to look at our rates and charges. Those rates and charges, as you know, they bring in our fixed charges, our standby charges, and any of the contractual charges we have with our refinery customers. The second item we're asking them to look at would be to look at our current rate structure. So again, we have a certain rate structure we use on our potable sales, and we have a separate rate structure for recycled water sales. So we want them to look at that and possibly recommend any alternative methodologies to promote stabilization of our revenues, to look at possible ways to promote conservation, also to help us to evaluate and eventually come up with a rate design methodology. That's item 2. Number 3 would be for them to recommend methodologies for establishing alternate water pricing and rate structures in response to water shortages, such as what we are in now. What is the best structure we should be in a drought situation? Or if there are regulatory actions, how do we respond in that situation? Fourth item under task 2 was to conduct a sensitivity analysis, and that would help us to look at the future to say, what if recycled water sales do this? What if potable water sales do that? What does our, our costs and our revenues look like under those different scenarios? And we want to look at a period of 5 years going to the future. 5 was to document what other water districts are doing. How do we compare to our peer water districts, and what are they doing as far as their practices, and how we can better improve our own best practices by looking at others. So they would do that comparison as well. And number 6 on here would be also to do a report, just like 1 or task 1. Bless you, to provide analysis, methodology, and basis for the recommended rate design methodologies. And again, we would have a workshop with them, and they would go through these methodologies with staff. So that's task 2. Moving on to task 3. So task 3 has to do with the board and public engagement. And so, as I mentioned before, during task 1 and 2, we're going to have these workshops within staff, but we also want to make sure the board's engaged and they have an opportunity to review and to provide feedback. So there'll be engagement with the board throughout the process. And during that time, we're asking the consultant to present alternate rate designs, pricing methodologies, and of course, the sensitivity analysis that we talked about under the different scenarios. Another item, number 2, would be develop a public engagement process. This would be mainly with our customers, such as our refineries, the retail water agencies, government and non-government agencies, any of the interested parties that would like to be included within this process. We would have that public engagement process. Number 3 is to finalize the rate design recommendations. So therefore, they would have workshops with the board to review those different rate scenarios, the financial stability, and the framework for establishing a rate setting policy. And this would give the board, again, another opportunity to provide feedback and input to the consultant and to staff on what those policies should look like. And last, on item number 3, is to prepare and deliver a draft rate setting policy for the board's consideration. So one more task, task 4, is what the tools and resources that would come out of this. As I mentioned, we do have some internal tools that we use, but we like to have something that's a little easier to use, that would be looking forward, that we can use during the budget process to allocate our different costs, and again, to look at those different sensitivity analysis that we talked about. We'd also want them to develop a software application where we would have a more modern, updated policy, or a application that would be based on Excel. Something that staff could use, that we could use on an ongoing basis, that would be, again, easy to understand. We could have dashboards, we could have different key performances that would be much easier to follow. Right now, we don't really have anything of that, and so we're asking them to put together a tool for staff to use. The last item would be then, with these different tools that we're asking them to prepare, to create instruction guides, possibly tutorial videos, and of course, to train staff on how to use these tools so we can then use the information going forward to set our rates and to allocate our costs. So moving on to, well, maybe I should just stop there to see if any questions about any of the tasks that we just talked about.
Questions? Director Williams? I think we're okay.
Okay, all right, thank you. So on page 197, based on the proposals that we received, we are looking at a project schedule here on page 197. As you can see, there are the 4 tasks plus some of the subtasks. And so we're envisioning this process will take about a year to complete. And again, you can see the board and public engagement is throughout that process. On to page 198. I'm going to get into a little bit of what the process was when we issued the RFP. So just stepping back up for a moment, we did issue a formal RFP on October the 28th. The RFP was placed on our e-procurement system, Mercell, and it was also on our website. We had proposals due on December the 15th, and we received 3 proposals. All 3 of these proposals were reviewed by staff as well as our general manager. And we looked to evaluate those proposals based on the firm qualifications, capabilities and experience, as well as the professional qualifications of the key personnel that would be involved in this project. We also looked at the technical approach and the methodology of each of the proposals, and of course, the proposed fees that were involved with each one of the proposals. We did conduct interviews with all 3 of the firms that provided the proposals, and that was done on January the 3rd. In addition to staff and to the general manager, we had an outside panelist who is an expert within cost of service studies. So he participated with us in this panel. And you'll see on page 198 the summary of the scores from the 3 different three different firms. First was A&N Technical Services, second was Black & Veatch, and the recommended vendor is Hazen and Sawyer. As I mentioned, based on the reviews of the proposals and the interviews, Hazen and Sawyer received the highest overall score. Hazen and Sawyer will be supported in this project by an experienced team from Bartle, Wells and Associates. They have a long track record of successful rate studies for public agencies within California. Hazen and Sawyer on Bartles and Wells provides West Basin with a depth within the facilities engineering, as well as in water rate setting experiences. There is a detailed score sheet on page 202 of your packet if you'd like to take a look at that. But again, we are recommending Hazen and Sawyer. Moving on to page 199, there was additional scope added to this particular recommendation, and this was task 5, and this is for as needed support. We have added $50,000 to provide any additional analysis that may be done for research, for the development of the rates and charges, developing the policy or creating those software tools. And this would only be approved on a task order basis. In addition to task 5, staff is recommending that we add a 10% contingency. And these would be for unanticipated things that would occur during the process of this year. And these also would be related to task 1 through 4. And they would also be on an authorized task order basis, and that would amount to about $28,000. Pause if there's any questions.
You're almost to the end, right?
Yeah.
Okay, let's keep going.
So I'll just, Margaret, did you, okay, Margaret says, go ahead. So I'm going to read the rate or the recommendation, if that's okay. Okay, so staff recommendation is that the board of directors authorize the general manager to enter into agreement with Hazen and Sawyer for cost of services and rates and charges policy development for the period of February 1st, 2023 to June 30th, 2024 in the amount of $230,130 for tasks 1 through 4 and $50,000 for as needed services to provide additional research, analysis, development of rates and charges, policy, software tools authorized on a task order basis for a total of $280,130 plus a 10% contingency for a not to exceed amount of $308,143. And that concludes my report.
Thank you. Director Williams, as the member of the committee, any questions or comments?
Just one question, and I guess this could come back at the board approval. but what is the last project that, was it Hazen and Sawyer worked on for us? Seems like their name comes up all the time.
If I may, Director Williams, perhaps our Executive Manager of Engineering and Operations, Bark Evans-Earlian, can answer that question. If you happen to know, just in the moment now, the last assignment that Hazen Sawyer received.
The last assignment, one comes to mind is the engineering support that they're providing for our JMM project. JMM Phase 2 expansion at the Carson Regional Plant. And that task order was north of $700,000.
What was that? I'm sorry.
$700,000, and I believe that was about a year and a half ago that was issued. I believe that could be the last one. I'm not entirely sure.
And I think I recall two additional from that time. One would be the operations support contract. I believe it's done with SBI.
Yes, that is true. The operational support contract, they were the sole bidders on that contract. We went out for solicitation, and that is a $600,000 contract. Thank you, Greg.
Okay, and then the last one I'm aware of would be the recycle water fill station permitting support.
Yes, that was through our on-call system. Although the majority of the work is done by a sub to Hazen, Hazen is the prime on that contract, and I believe can't recall the exact number. It was $100,000. I think. Some of that is we're incurring, and they're doing the majority of the work on it.
Thank you, Barca.
All right.
Director Williams, is that responsive to your question?
Yeah, I think we're going to be dealing with our never mind. I'll talk to you later about it. Thank you.
Thank you.
And I would just comment here that, Hazen and Sawyer certainly brings sort of the engineering aspect there, as you heard the projects that are listed here. But Bardowell Wells is actually known within the industry as being a sort of one of the experts, along with the other two teams that you see that were presented here, and decided to bring on Bardowell Wells to do that. So they actually have about half, if not more than half of the hours associated to putting that work together. So I do understand Hazen has made a presence here, but the Bardowell Wells team has a very significant role within the cost of service report.
Okay. Any other questions or comments, Director Williams?
No, that's it. Thank you.
Thank you. Any other questions or comments from my colleagues that are still on this call? Let me just ask a couple questions. Steve, first and foremost is we expect this to take about a year to do this.
Correct. That schedule was actually pulled from their proposal that they provided to us.
When was the last time we did a rate study, or maybe even like to this level, but when was the last time we did one?
So we've been here a long time, and I will say that there was an effort that was done, I want to say in the early 2000s, but nothing more recent than that. So any of the studies, if you will, that have, or any of the work around these topics have been internally driven. And so we do feel that it is an appropriate time for the reasons Mary Ann have shared as it relates to the fact that we have refinery agreements going up for negotiation with our change in our water forecasting going forward, and the potential for lower sales. How will we still continue to deliver on all the services and activities that the district has? And so we do see it's an appropriate time to look at that. So to answer your specific question, I don't know, I don't know the specific time, but I will say that Mary and I weren't even involved the last time that this was here, even though we've been here. So,
Okay. Now, we did adjust rates a handful of years ago. Or maybe we reorganized how we charge our
so
customers.
we did
some.
have, so that one was just to maybe reorganize is a good way to put it. We took a portion, we understood that with the declining sort of sales, we wanted to make sure that we had a fixed revenue that was coming in. So in 2018-19, we implemented a fixed service charge, but it was only to sort of add to a charge that was there. It didn't take a view, if you will, of how we were doing other rates and charges. One of the reasons is that on a recycled water side, we had long-term agreements. And so we were kind of in a situation where we needed to maintain what was stated within those agreements. But because those agreements are now starting to come to fruition in 23, 24, 25, and 27, and then another one not until a lot longer, we are in a, like I said, a more appropriate place that we can make sure that there's consistency in how we're applying those rates on a go-forward basis.
Remember, we had hired, I think it was Raftalis or somebody.
That is correct.
That, but that was, as you just explained, what that was for.
It was a very specific effort to bring in fixed revenues. And just to remind you is that while we were implementing that fixed charge over a 3-year period of time, we actually held our reliability service charge, which is on a volumetric basis, held that flat so that we could then ramp up. So if you will, that the revenue requirement was still the same. It was just that it was being collected in a new way with this fixed service charge.
That's what I was getting at, because so I mean, did all the proposals did they all think it was going to take about a year to do this?
They did, yes. Maybe one was like 10 months to, but essentially 10 months to 10 to 12 months is sort of where we are. So certainly I've had some conversations with Greg as we approach into fiscal year 23, 24. What does that mean to our rate considerations when we're going to be in the midst and just starting, if you will, this work? I mean, again, assuming the board approves this on next Monday, January 23rd, we would begin that work with them in February, and then in short order, be able to provide you a more specific sort of ideas around timeframes of where we would be coming back to the board. But it could, it certainly will not be in time for the fiscal year.
Please understand. But I just wanted to confirm. So it's, it is what it is. It takes about a year to do something like this. Let's see. I see. So only 3 companies put in submittals.
Right. So for instance, we did specifically reach out to Barlow and Wells, but they had already partnered up with Hazen and Sawyer to put a proposal in together. The A&N was the one that was there, and also Black and Beach. We did have a few others that expressed interest, during the process, even asked questions, but when it came down to the submission of the proposal, again, only 3 submitted their names.
That's good.
And if I may, I think we had a pretty robust invitation list.
We did. I mean, we definitely reached out to a number of things. I reached out to my colleagues at other water districts, from a proposal to what your consultants are, what were your results of your things. So we did specifically make sure that we reached out to a good number of individuals to make sure that we broadcast wide. And as Marianne had shared, we also posted it onto our website so that you could see it listed there. And I believe that it was also ran through our social media as well.
So back to this, the point is that of all the people we reached out to, there were only 3 that submitted. They are the 3 that got evaluated, which I do see the range of prices is quite amazing. I mean, you're talking from, $115,000 ish all the way up to $330,000. And so Hazen's falling in the middle. But here's my question. I mean, this is pretty expensive. So is this in keeping with industry standard as to the cost of what this is going to be to?
I would say that, what this does is it doesn't mean that we have to spend this every time that we do it. I mean, I think that you certainly we're asking for a lot here. We're asking for tools and resources, a policy. if you will, the district has a informal process of understanding what our rates and charges. We'll pass through metropolitan rate increases. We'll put a fixed service charge in. We will follow through with, what our, recycled water rates are per agreement. But we don't actually have a policy that gives us some guidance, if you will, on other there. So there is some initial work here that I would say on an ongoing basis doesn't necessarily need to be repeat, but it is good things for us to have in place. So we are looking forward to having that. We also were concerned about the range of dollars. And so we looked at sort of level of effort and who also is actually participating in that process. Is it the high level person? Is it the entry level person? And so that also was taken into consideration to make sure that we're not just getting, hours submitted to us, but it's just the low level person, because we want good input. Because again, it's been a while since we've done it, and we know that the district is, having some real discussions around sort of the impact of the drought and what the future vision is for West Basin. And we want to make sure that what we're putting in today is going to carry us forward in whatever that scenario could be. So.
Okay, I think the last question I have is, who is the person that was on this outside person from the?
We asked Drew Outwater, who is the Deputy General Manager over at Molten Nagel, but for a number of years served over at Metropolitan Water District, serving as their rates and charges individual. So we felt comfortable with him in sort of his comments, if you will, as to who could provide the services for us and what would be the right fit for the district and what we're looking for.
And he also has expertise participating in AWWA in their cost of service
working group.
Thank you.
Okay, very good. I mean, look, I see what the results are. I see where people scored on this, the points. It is what it is that we only had 3 that obviously put their submittals in, and I understand that Bartle Wells is pretty good. I looked at their background information on them. I am a little bit baffled by the range of the costs, quite frankly. But I don't know the market for this. I just don't. So anyway, Director Williams, what is your thought at this stage with this recommendation?
Well, I think it should go to the full board, because I know that our colleague Alvarez has a lot of knowledge and experience in this area and I think we should hear his comments before we pass on this, and we will, because it's not going for approval here, but on to the board for consideration.
Okay. Oh, there you are. I see your camera now. I've been looking at a blank screen. I don't know what I was looking at. Okay. No, I actually concur with you, Director Williams. I think that we should just move it forward with no recommendation, just so we can all
Correct.
talk about it at the board. Who's talking? Yeah, okay. Sorry about that, Director Williams. No, I concur with you, and unless there's anybody else who has any questions or comments, or you, Director Williams, anything else?
That's it.
Okay, yeah, but I think we should, move it forward to the board, no recommendation, and we can talk about it obviously Monday and go from there. But I do thank you for the thorough report. Okay.
Thank you. So that brings us to the final action calendar, I believe.
Correct.
So that'll be item 5H. And this is our, it's a name change of a standing contract. And so our executive manager of finance, Margaret, will provide that recommendation. So Margaret, please.
Correct. As Greg has already commented on, it's just a name change as required. This is considered a material change. I'm just, sorry, we're on page 203 of the packet.
Okay.
Sorry. Yes, this is a name change for one of our existing vendors. Wood Environment and Infrastructure Solutions has a name change to WSP Global Inc. And as this is considered a material change, when it's a vendor change, we are asked to bring that to the boards for their consideration. And so this is just asking for that board to authorize that name change from Wood Environment and Infrastructure Solutions to WSP USA Environment and Infrastructure, Inc.
Okay, excellent. Seems very straightforward. Director Williams, question, comment?
No, thank you. Pretty straightforward.
I think you would probably agree. We'll just move this forward to the board with a recommendation of yes.
Yes.
Excellent. Anybody else? I don't. Anybody listening? Okay. Let's go
Thank
to
you.
the information. Oh, is that Director Gray?
Yes, no, thank you, but
No
thank you for asking.
questions? Okay, thank you.
No, thank
I'm
you.
I'm also been listening.
Wonderful. Thank you. Director, okay, let's go to information calendar. Item 6A, Director Installation Ceremony and Oral Report.
So,
That is our, we're moving forward with yes on that one, right?
Yes, correct.
Okay. Okay, so regarding item 6A, I have to regretfully report that our Assistant General Manager is away from the office on a family matter. And so allow me to provide the oral report on his behalf. And so give me a moment to locate the information.
How about this? If you don't have it right now, let's keep going to crank through and we'll come back. So
Sure.
let's go to item C, the monthly financial report, because our staff can obviously go through that while you find what you need. So
Thank you.
go ahead. Item 6C in CAT.
Good afternoon, directors. We are on item 6C, which starts on page 210. This is your required by your admin code that we present certain internal reports each month, which includes the monthly demands, the cash and investments, and the water sales statements, as well as the director conference and expense report and the executive management and staff travel report. So if I could turn your attention, starting on page 212 of the packet. It begins the monthly demands for the month of December. It includes all your operating capital payments for December to conduct this district business. For the month, we had about 18.1 million in expenditures. I'll just point out one item to note. That was check number 88746 on page 212. This is for the settlement agreement for the LA Waterkeepers versus West Basin. So just wanted to point that item as something not ordinary. Other than that, that's all I have on what monthly demands.
Hey, any questions, Director Williams, on the monthly demand?
no, thank you.
Okay, I do not either. Let's go.
All right, moving to page 220 of your packet. This is your cash and investment report. This is as of 12/31/22. We had a market value of 76.3 million. This was an increase over last month. One of the reasons we had an increase is we did get some standby charge money of about 2.5 million. Again, if you look at the diagram on the right-hand side, you can see we're very well diversified. We have about 30% of our investments in our investment pool, very liquid, and then we have about 19.3% within our youth treasuries, and followed by our agencies at 18%. So moving on to page 221, this is your credit quality distribution. Again, we are very good position. We have majority of our investments within the A category. What's in the non-rated, the NR, just as a reminder, that's our LAIF and our California class.
No, California class is AAA.
Thank you. California class. Thank you for that correction. So it is LAIF. All right. So moving on to page 222 is maturity distribution. As I mentioned, we do have a large portion of our funds currently in very liquid. That's again in response to the market. And you'll see then we have a lateral through the next 5 years. On page 223 is the transactions ledger for the month. Again, this shows your acquisitions as well as your dispositions for the month. Again, nothing unusual to note here. We did have some treasuries that we purchased and some that we sold during the month. And starting on page 225 through 233 is all the holdings within your portfolio. These are grouped by the security description type. And that ends, as I mentioned, on page 233. And with that, I'll just pause to see if there's any questions.
Any questions, Director Williams?
No, thank you.
Anyone else? Okay, go ahead.
Okay, so moving on to item 6C. This begins on page 238 of your packet. This is your monthly water sales report. This is through the month of December. Starting at the very top of the page there, you have your imported retail sales. We have an annual budget of 103,200 acre feet. You can see for the month of December, we were under budget slightly, which is interesting because I looked at the precipitation. We had more precipitation last December than we had this December, but yet we had less sales. So I think that tells us our drought messaging is working. Overall, on a year-to-date basis, we are about 5,300 acre feet below budget on our retail sales. That's about 9.7%. Moving down to the imported barrier, this again represents the water that we inject to both the Dominguez Gap and the West Coast barrier. We are trending under budget of about 1,000 acre feet or about 32%. And then moving on to page 239, you have your recycled water sales. Just to highlight, we did have a very positive month. For the month of December, we had overall 2,600 acre feet of sales compared to a budget of just under 2,300. Moving down to that first box, if you will, you can see that the barrier, happy to report, we were able to produce 864 acre feet compared to a budget of 712. So that's really good news. As well as on the refineries, we sold almost 1,600. We produced almost 1,600 acre feet compared to a budget of about 1,357. So overall, we did produce better for the month of December. On the year-to-date basis through December, we are trailing under budget by a little more than 1,000 acre feet. And that primarily is due to the barriers we've discussed in prior months, and the refineries are doing quite well. See if there's any questions.
Any questions?
No, thank you.
All right, so moving on to the executive management and staff travel expense report that can be found on page 241 of your packet, followed by page 240 and 241. So the director's conference and travel expense of 240 and 241 is executive management.
Okay, any questions, Director Williams?
No, thank you.
That concludes your monthly reports.
I'd like to maybe just take one moment to acknowledge Mary Ann's report on page 238 regarding our imported water sales. We are substantially reducing our delivery of imported water. And I believe we're trending towards just below 100,000 acre feet for a full 12 months, which is remarkable in terms of the conservation efforts that are happening in our district, especially in view of, the regional water supply issues. And so I think that's something to really applaud our customers in terms of, their response to the drought.
Yep. Excellent. Help our sales, but excellent. Right? But
Well, there is a dilemma there.
We'll get to budget versus action in a moment.
there you go. But the big picture of this is where we want. Yes. Director Gregg.
Chair Houston, hi, thank you. I'm so glad to, can you hear me?
Yeah, go ahead.
Hello? Yeah.
Go
So
ahead.
glad that General Manager mentioned that, and I want to compliment staff and Mary Ann, thank you for that report. That was really good news. I know it's a balancing act with with our water supply and our water conservation. So kudos to the public for continuing to get the message about saving water, and the fact that reducing our dependence on imported water is so important. So thank you, staff, for all your work for the report this morning. Thank you, Chair.
Thank you, Director Gray, and no, excellent work by our staff. And let's see, is that it for this report? I
The
think it
monthly
is.
financials, it is, yes.
Right, okay, so we're done with that. So now let's go back to item 6A, which is the director installation ceremony, just to give us an update, Greg.
Absolutely. So, and thank you, Desiree, for providing the draft report, which, by the way, we are now adding this as an agenda item for our Friday special board meeting and workshop. The intention was to bring that forward today as an action calendar item to receive additional direction from the board today as a part of our special board meeting. However, we were still working towards getting the available information. And so here we are right now. So we were looking at 3 venues, the Carson Community Center, SoFi Stadium, and the Redondo Beach Performing Arts Center. Starting with the Carson Community Center, the available dates, and I think this is the key information, includes Wednesday, February 1st, Thursday, February 2nd, Friday, February 3rd, Monday, February 6th, Monday, February 13th, Tuesday, February 14th, Friday, February 10th, which I believe was one of the dates that the directors made available in our water policy meeting last week. However, on Friday the 10th, there is a prior event that is booked, and they have the venue reserved until 4 p.m. And so the venue could, once they, cleaned up after that prior engagement, we can have the venue as early as 7 p.m. on Friday, February 10. And then the remaining day that's available is Tuesday, February 28. So again, February 10th was one of the days that the committee had made available on Friday in the water policy meeting. I'll stop there and see if there's any questions.
Let me just jump in really quick. Why don't you remind us what dates we proposed? I think they were just Friday dates, right?
I believe there were Friday dates in February,
What were those dates?
and I don't have.
Anybody know what those dates?
17th
I'm sorry, can you say it again?
and the 17th.
I thought there were 3.
3rd, the 10th, and the 17th.
Okay. February 3.
Thank you, staff.
February 3, February 10, February 17. So that was what the board talked about the last meeting we were together. Those are the dates I would personally like to hear about. So of the venues you explored, who has availability on the dates that the board said worked?
Okay, so the Carson Community Center, actually, February 3rd was one of the dates that you've indicated, and it appears there is no commentary here about that particular day, so it's available.
Oh.
February 3rd is available.
Okay.
Okay,
So February 3rd sounds like it's available for all 3 venues you explored?
for Carson Community Center,
Okay.
and February 10.
Okay, but 10 later in the evening because they've got something going ahead of us.
Correct. And then what was the other day? February
17th.
17 is not available.
Okay. Okay, what about the other venues?
Yeah, so SoFi Stadium. So SoFi Stadium is not available on any of the 3 days.
Okay.
I do have 4 days listed, but they're not the days that were indicated last week.
Got it. Okay, and again, this is just an oral report, so we just want to hear the quick rundown. So SoFi Stadium's not available on the 3 dates that the board was looking at.
Correct.
Okay, so let's go, what was the other one? Redondo Beach? Performing Arts
Redondo
Center?
Beach Performing Arts Center.
Uh-huh.
And so that venue also is not available on the 3 Fridays that were indicated in last week's meeting.
Got it. Okay.
There is one available day in February, but it's not on any of the 3 days that we just mentioned.
So this item will be on the agenda Friday
Correct.
to discuss with the full board at that special meeting. Okay. But right now, what I'm hearing is Carson Community Center is available on the 3rd and the 10th, but it may be a hair later in the evening. Okay. So obviously, when you have your the item on Friday, you'll have all these details. We can listen to all the different dates and whatever, but at this point, the only thing that we have been focused on were the 3 dates.
That's correct.
Okay. And I think we definitely need to be for sure, if the 3rd is available at that Carson Community Center, that is 100% accurate, because you said there's no notes for or against in your write-up there.
Correct. And I'm interpreting that as there's no restriction.
So, all right, so I'm gonna open it to my colleagues for questions or comments in 1 second, but I think at the end of the day, we need to just have this on that agenda on Friday, so we can really wrap this up, because we gotta get moving. We need to secure a venue. And if we do have to look at other dates, we'll look at other dates potentially, but that's the board decision. But back to this, so, Director Williams, do you have any questions or comments right now?
No, I would just like to say that the 10th, Friday the 10th works for me, but Friday the 3rd, that is 3rd works for me, but the 10th does not.
Okay. So
You said the 10th is not.
yeah, so to make sure we heard you, Director Williams, so the 10th no longer works for you.
Correct.
Okay.
Things
Good.
move around. When you don't move, other things are still moving.
That's correct. Yep. That's why we keep playing this whole game right now. And I'm with you. But the 3rd works for you, right?
Yes.
Of course, the 3rd is the earliest in the month, which I think, would be ideal, but, at the end of the day, the board has to make a collective decision. Okay, so thank you, Director Williams. Anybody else? Director Gray, questions, comments?
I had all 3 dates held on my calendar. All 3 days will work. The 3rd is a little bit difficult for me, like in the evening, but I'll, make it work because I did commit to holding the date, so. But the 3rd would not be my preference, but I just heard Director Williams said he's not available on the 10th. So I'll just have to go with that if the board decides that's what we do. So thank you.
Let me, I have to step back for a second myself, because I thought the 3rd, was that one that was, no. The 3rd was never on this. No, the 3rd was not on this.
Oh,
All right, we gotta,
yeah.
hold on, everybody. We screwed up, because I remember saying, wait a minute, I'm not available the 3rd either. So the dates that always were in question were the 10th, the 17th, and the 24th. Those are the dates. The 10th,
Okay.
the 17th, and the 24th. And obviously, we're gonna talk about this on Friday. So here, let's just get feedback from the board while we're just all here for a moment, and let's just push it to Friday to have this conversation. So we heard Director Williams, the 10th probably not gonna work for you, right?
Correct.
Okay. What about the 17th and the 24th? Are those still on the table?
Yes.
Okay, Director Gray,
Yes, I'm confirming right now. I do see something about a budget workshop. Is that still pending for West Basin in the afternoon on the 17th? 2 to 3.
That is confirmed.
I think that's still
That's
confirmed.
Is that, I believe at 3 o'clock.
It might, well, right now it might be at 3, but we can always readjust if this all comes together, so.
right. Okay, so I did put another hold on the 17th, the 24th. Those are the 2 we're looking at, right?
Yeah. Yeah,
I do. I have all.
okay.
Right.
So then, Director Deere, are you there?
Yes, I am.
Okay, so now it looks like we're down to February the 17th and the 24th. That was Friday evenings. Are you still available for a special board meeting?
Are you asking me?
Yes.
A lot of
Yeah,
stuff going
there's one
on.
scheduled. There's one scheduled on 17th at 2:00. Is that right? Budget workshop?
We might have a workshop that day, but we're talking about an installation ceremony in the evening.
Yeah, any of those evenings is okay with me.
Okay, good. Okay, so there's 4 out of 5 of us are present at this moment, and the 17th and the 24th seem to still work. So let's do this. By Friday, can you all have better information for us on this item so we can try and make a decision and get a venue solidified?
Yeah, but I'm going to tell you right now, based on the responses that we received from all 3 venues, neither of those days are available at any of the 3 venues, the 17th and the 24th. None of the 3 venues are available on those 2 Fridays.
Okay. So let's do this in the interest of all time for everybody involved. Let's, we're going to talk about it Friday as we planned, and we'll go from there.
Okay.
So
Thank you so much.
more to come. All right, thank you, and
And if I may, I believe our intention, and I'm going to ask my acting board secretary, is to post the Friday workshop agenda by close of business today. And so you'll have this memo that I'm looking at right now with all of the available dates for the 3 venues. And so hopefully on Friday, we'll have a really good discussion around what days work, what days don't, which venue is the best, in consideration of the costs, which are also listed here.
Okay, no, that's great. Okay, that would be excellent. All right, anybody else have any questions or comments on this item? So on Friday, we'll discuss it. Go ahead, Director Williams.
That's, we're a water agency. Are we taking into account the water conferences that are scheduled for the same time? Well, we just say, well, we won't go to them. We'll just have our swearing in. Because the Urban Water Institute is set. And also the Cal D-Cell annual conference.
Correct. So that,
I think the direction we received was to focus on the 3 Fridays. And what we've done is to ask for the availability of each venue for the month of February. And so we have the dates throughout the month of February for all 3 venues. Whether any of those available dates work for this board, from what you said, Chair, we will be talking about that on Friday.
Okay with me.
yeah, I concur, Director Williams, and we have to make sure we're looking at that on Friday to see if any dates we decide on might interfere based on conferences or other things.
And Desiree, if we can make sure we have the most up-to-date director calendars for Friday.
Yes, we do. We have no directors going to any conferences other than the ICA conference the first weekend of February.
So, Director Williams, we'll make sure that we're looking at that on Friday too.
Okay, very good.
Yeah, and I apologize that this took longer than expected, but we just want to keep that ball rolling. And we can have a better talk on Friday with more information. So, okay, thank you very much.
Thank you.
Chair Houston.
Yes, go ahead, Director Gray.
I had to get off for just a minute or two, but did we decide on another date? Or did I miss? Can you tell me the dates again?
Oh, we're gonna, you know what, Director Gray, we're gonna have to talk about it Friday because now the dates that were available, apparently the 3 venues we're looking at are not available. So we're back at the drawing board, and on Friday, it's gonna be as a item on our special workshop board meeting.
Okay.
So I guess the best for all of us is bring your calendar on Friday and let's try and help our staff figure this out a little bit.
All right. Thank you.
Great. Okay, thank you. Okay, let's keep moving here. We're nearing the finish line. So
We
we've
are
got
nearing the finish line.
6B as in boy.
Yeah, 6B is in boy. This is our Strategic Management Advisory Services RFP that is in development. And so I'll draw your attention to package page 206. And so I'm happy to report that staff has made really good progress towards developing an RFP that would help us do a few things. And so I want to direct your attention towards the bottom half of page 206, where it lays out 4 primary tasks that this strategic management advisory services would perform. So the first item is our strategic business plan development and implementation. So as we know, the district has initiated a strategic planning process in 2008 and has updated that plan every 5 years. The most recent plan being 2017 through 2022. So that puts us into today with the need to renew that plan, and having a consultant team to help the board do that is what I'm working towards with the development of this RFP. Now, there is a nexus between that effort and many things, but the relevance of the following 3 tasks is the nexus of the staff engagement with the board on developing the strategic plan and how that relates to our organizational capabilities. So with that, task number 2 would focus on the policy development around diversity, equity, inclusion, and accessibility, DEIA. And so as we know, we have a workshop coming up this Friday to talk more about that with the board. But this proposed contract would bring in expert services to help us with envisioning what those DEIA opportunities are for the district to really embrace those type of policies and best practices throughout our delivery of services and all that we do. Task number 3 focuses more on our internal capabilities and our external capabilities from an organizational assessment perspective, and then also from a change management perspective. And so when we talk about strategic business planning, one major element of that will be invariably the future direction of our water recycling program. And so with changes anticipated in our program, changes are also anticipated with our staff, with our contract operators, and there's other facets of conducting an organizational assessment that will help ensure that the organization can carry out and effectively implement our strategic plan. And then lastly, it really is the heart and soul of our staff in terms of managing the talent that we have here. We are obligated to conduct a comp and classification study periodically. I believe it's every 5 years. And so we are at about that cycle now. And so this task would allow us to do that, basically looking at our current workforce and how that compares to other agencies from a classification, duties and responsibilities, and the compensation related to that. And then also looking at succession planning as we are anticipating retirements in certain areas and ensuring that we have continuity of business operations from the current incumbents to the next generation. And then also making sure that we are developing our workforce in terms of training, in terms of leadership development, those type of things. So I see that the nexus between these 3 tasks are our staff and making sure that we're able to engage our staff in a very efficient manner. Because if staff is meaningfully engaged in each of these, I think it would be best for us to have a single team that can do that in a thoughtful manner and in an efficient manner, rather than breaking these tasks up into several contracts and having different teams engaging staff in different ways. So with that, there's a little bit more detail on packet page 207 package page 208, which further describes each of those tasks. But I'm going to stop there and just direct your attention to the fiscal impact, as I'm anticipating that these level of services may range between $200,000 and $300,000 over the course of an 18 to 24 month period. So I'll stop there and ask if I'm happy to take any questions you may have.
Great, thank you, Greg. Any questions or comments? I'll start with Director Williams because you're the member of the committee. Director Williams.
No, thank you. Not right now. Thank you.
No problem. And anybody else? Director Gray? Or Director Gear?
Not right now, thank you.
Yeah, sure. Now I saw this on the agenda and this is an information item, and I have to say, I do have some concerns because of the estimated cost. I mean, $200,000 to $300,000. We have done a strategic vision work before in the past with different consultants. I don't remember the cost, but I don't believe it was nearly this high. Does anybody have a remembrance?
Context for that. So we have used consultants in the past, and even in doing some preliminary work here, trying to get some sense of pricing in today's market, because it's been a few years. I think the strategic planning effort by itself could be $75,000 to $100,000. And it's probably what we spent in the past with various consultants here to assist us in there. And then to speak to the other efforts. So class and comp is, it's been an individual effort that's been in the $25,000 to $35,000 range. DEI is a new effort. Certainly, I know there's a great importance on that. You're having a workshop this Friday about it. And so certainly I don't know what the price point could be about that, but we did set aside some dollars, I believe, in this year's budget to do that. Succession planning is something that we have not done, but again, thinking about what are the contexts of what needs to be done, I do think that it being in the $20,000 range. And so when we started to look at the individual efforts, it really does kind of start to add up to these things, even though before you would have seen them in separate little efforts. You would have seen 75 here, 40 here, 25 there, 5,000 there. And so when you start to add them up, they do get to 2, 3, because Greg and I did start to see that number is like, wow, that's really significant. But I do see the vision that he has and trying to have a unified voice as we looking at the future direction of the district here, both from a strategic perspective as well as bringing in employee engagement into this process, and to make sure that we are meeting the needs of a class and comp succession planning and the other efforts that he identified.
And let me ask a question. So the class and comps you're proposing to wrap into this, how often do we have to do that? You said
5 years, I believe I heard him say 5 years.
5 years, okay. And what's the time frame of needing to do that on its own?
Last one we did was 20.
The last one we did was started in 2018 and it was completed in 2019. And the process in and of itself took about 6 months. And again, we had an estimated timeline that it was a bit shorter than that, but due to unforeseen circumstances, it ranged until it was about a 6-month process.
And that's something though that we have to do, right?
Yes, because we have to address, again, our organizational structure in terms of looking at our classes, all of our classifications within the agency and our salary ranges to ensure that we're up to par with market range. And so the last study that was completed in 2019 by Ralph Anderson and Associates all dictate, and the 2 previous ones prior to that all dictate that the district would have or conduct those studies every 5 years. And in essence, we've been pretty much on track for doing so every 5 years. And again, our salary schedule is really incumbent upon, conducting that type of study to ensure that we're within the market and competitive with other like districts and agencies.
Okay. So I have a couple of thoughts just right now, because it's just an information item. I don't think that this as prepared is ready to be issued by next month. I just do not see that happening. I think the board needs to have input into the process. We really haven't talked about any of this type of work or effort, if I'm not mistaken, since our workshop last summer, right? We haven't really had any meetings to follow up on strategic vision and where we're going. And the fall hit, it was election season, a lot of other things were happening. We just didn't do anything. So
Correct. I can't really point to a specific robust conversation around strategic planning. I think we had some commentary around that in the summer workshop, but it wasn't a focused discussion on strategic planning.
Right.
So the intention here is to line up the resources so that we can, have that when the board is ready to begin that process.
Okay.
But I'm certainly interested in the board's feedback, input to shape what we do. And so not waiting for, that specific direction. This is kind of lining up the resources. If the board wants to take an entirely different direction, I'm certainly open to, receiving that feedback and going from there.
Okay, so again, for what it's worth, I think because this is an information item, it's pretty much presented like this is where it's going. It's going to be ready to get out to the public for advertising by the 27th of next month. And so personally, I have concerns with that. I think that the board needs to weigh in on this. So if it needs to be on the board meeting agenda this month, or if it needs to be next month in a committee, but I don't think we're really ready to look at a couple of things until probably pushing February or March. We're going to have this workshop Friday. So that goes into some of our thoughts. We really still have got to look at the long-term, vision of the agency. And I don't know that, I don't think having it as an information item to say we're looking to spend $200,000 or $300,000 on something, without board conversation is ready for prime time. So, I guess what I would do right now is, this needs to be, somehow the board needs to talk about this. So if it needs to go to the board as a whole to give you
I
some
would
guidance.
recommend taking this as an info item to the
There we go.
board.
Yeah, let's do it as an information item, not an action item, just so the board can at least start having a little bit of input in this as a whole.
Yeah, and that's exactly the intention here. Clearly I'm not just unilaterally issuing an RFP.
Yeah.
I'm bringing this forward as an information item to spark that, discussion. If the board, provides input that would suggest, this is not the right way, we want to do something entirely different, then that's the kind of, I'm not looking for that kind of feedback.
Okay, no,
I'm
no.
hoping to get support, but if the board wants to do something entirely different, I'm certainly open to hearing
Good.
it.
I just don't want the train to go, down the tracks too quick here because, as we all just discussed, there's a whole bunch of things that go into this, and rather than getting RFPs out there and going off in a direction, I think the whole board needs to weigh in because maybe we do want to piecemeal this. Maybe something does need to be done on its own versus lumping it all together. I don't know the answer and I'm only one board member, but I want to make sure we all have the opportunity to work with the general manager on what this should be potentially. So let's do that. I think we should put it as an information item on this agenda coming up, almost identical probably what you got here. So the board can look at it, give some input and or push it back a little or say, go back to committee. I don't know the answer, but let's do that.
Okay, and this is perfect because that's exactly what I was hoping to have, is to allow this to come from the committee to the full board and continue the same conversation.
Because one last thing I'll say right on this is, at the end of the day, we're in the new year, we're going to reorganize, of course, the officers, but usually in the new year's when we do look at a board workshop at some point to again, all right, what's the plan for the year, et cetera. And so we're not quite there. So again, we don't get a lot of things set into motion with leadership and committees until February practically and March. So I just don't want this to get too far along and we haven't had input. So let's put that on as information item. Any other questions or comments from the board members?
I do have comments. I want to defer to Director Williams. He's a committee member before I speak.
Okay, Director Williams.
Go ahead and weigh in.
Director Gray.
Yeah. I thank you. I've heard the comments from the chair and also the presentation. For me, I think it's been proactive to even bring this particular item to the board because it is informational. It's not putting anything into place. It's really bringing our attention to very important area, and certainly strategic planning. It's an area that we should be looking at, and I heard staff, I believe, say that the compensation schedule or review should be every 5 years, and certainly D&I is important to me, as I believe to all of us. And so I think those are 3 important areas that we need, to start talking about. This is the beginning of a process. As Greg has indicated, it's just to bring the attention to the board, and the board will have more discussion about it. So I really commend him for even bringing it up at this point, because it is the beginning of the year. The year will go by very fast. So, and it takes, a while to put things in forth. I do have a few questions right now. The information item you have is your idea to have one consultant to do all these 3 things I believe you mentioned, or to have separate consultants to address each of those areas?
Very excellent question, Director. And so my thinking on this is it is unlikely that we will find a single firm who can accomplish all 4 of those tasks. And it's more likely that we might have a team that would partner. So you perhaps might have specialists in one area or 2 or 3 working with a prime consultant who then is able to facilitate these 4 tasks, but in a coordinated fashion. Because as I mentioned, one of the center points of the synergy between these 4 tasks is the engagement with staff, because each task will involve speaking with staff, perhaps conducting surveys, maybe conducting interviews, maybe having focus group discussions. And rather than having, individualized contracts with individualized teams interacting with staff for individualized purposes, I think it'll be much more effective to do that in a coordinated fashion where information is gathered, in a streamlined manner, and the information is provided in each of the buckets in a streamlined manner.
Okay, well, obviously, we've got to talk about that concept further, because I'm not quite sure if that's the way it should proceed, but I do appreciate you bringing the thought of having the board focus on it. And, for me, whenever we do, support any contract for any issue, to me, it's the deliverables, what is delivered and how can it benefit the district. So for me, just that comment, the deliverables are really what's important to me. But I look forward to future discussions of it, but I thank you for bringing it to our attention today. Thank you.
Thank you.
Thank you, Director Gray. Director Williams? Director Deere?
No, I've got to be going. I've got some things I've got to do. It's been over 2 hours, so I want to sign off. Thank you. Excellent meeting. Bye-bye. Bye-bye.
Thank you, Director Deere.
Okay, so, okay, good. So thank you, staff, and also Director Gray for those comments. And again, I completely appreciate how this has been brought forward and what I wanted to make sure of, because it says right here in this item that the anticipation, the general manager intends to advertise the request for the proposals no later than by February 27th. So we have a month and a couple weeks, or a week, that this has been brought before us. And so to me, that's a little bit concerning if we don't have that conversation. So hence, we need to talk about it at this board meeting, give you all direction to decide what is the best path, and that the 5 board members are in alliance when it comes to that. So
absolutely.
So at the end of the day, I'm not taking a position one way or the other. I'm just saying I was a little caught off guard when I saw that put into this write-up. And, it can't go through a committee just as an information item without, further discussion from the whole board. So again, it needs to go on the board information item. Because again, we will probably, of course, have a workshop at some point, what do you call it? Retreat, yeah, the retreat, you know, in the next couple months, give or take, that would also help guide where this is going. So I don't think it's quite ready and that we all need to talk about it. And I think Director Gray was spot on as well with her comments. So there you go. Information item on Monday.
Thank you.
All right. We are nearing the end.
Okay.
Last item, aren't we, Greg?
So that takes us to, let's see, item 6B maybe?
D.
6D.
Dog.
David.
David, there you go.
Okay, and that brings us back to Mary Ann to discuss our quarterly our second quarter budget to actuals. And if I may, this item was prompted by a request of Director Alvarez in the November 28th board meeting, asking for a mid-year budget to actuals review. And so Mary Ann, please.
Thank you, Greg. Yes, I will be handling this item, 242. And as Greg mentioned, we were asked to bring this item a little bit earlier than we typically do. So I do want to mention that for the month of December, some of the numbers you'll be seeing are estimates because we have not closed the month. But as far as, and we'll go through it, and I do have a presentation we can go through, but I do also want to comment that the other request that was made was to include some more detailed program budget information, and that's included in the packet. So what you have on page 244 is what you normally see. Again, including some estimates. That's your revenue and expense budget versus actual report, that one-page summary. And then from page 245 to 252, this is the more detailed by program expense versus budget that we were asked to present. And then following that, we do have our presentation, which I'd like to just take a few minutes to run through. And this is similar to what we did last quarter. All right. So if we could then maybe go to the presentation, which begins on page 253 of your packet. This is your second quarter budget to actual results with December 2022 estimated. So starting on page 254 of the packet, this is the overview. If you recall, we showed last quarter, and I think this gives you a nice high level view of what we've had happened here in the district through December. In that first column of numbers, as I mentioned, some of the numbers are estimates. Although the revenues in that first line item, most of them are actuals. We did get actual sales for our potable and our recycled revenues just last week. But anyhow, so overall, you can see our net revenues through the month of December is about $8 million. That's compared to a budget of about 4.7. So we have a favorable variance of 2.3 million. You can see from the very top line where we are under our revenues. That's an unfavorable revenue variance, as we've talked about earlier. I don't know how you view less sales, but that's how it is right now. And for the operating expenses, I'm happy to report that we are under budget on our operating expenses. That's a favorable variance there. So all in all, we are showing a debt coverage ratio of about 1.77 compared to a budget of 1.44. So moving on to page 256. As we mentioned in that previous slide, we were under budget on our revenues, about 9.8 million. This gives you a little bit more breakdown. Again, potable water sales that we talked about a little bit earlier, we are below budget of about 9.5 million. And then on the recycled water sales, we're doing much better. You can see we're under budget again, but not as quite to this level of the potable water sales. But all in all, we have our total revenues at 104.4 million compared to a budget of 114 million. Moving on to page 257. This is the detail that is makes up the numbers behind the potable water sales. And hopefully in front of you, Director Houston, is the same what you see on the screen. I did have to make a correction. Okay, thank you. So the imported water sales, as we saw just a little earlier, for our retail, we're at 49,600 compared to a budget of 54. So we're down about 9.7%. And on the barrier side, We are at 2275 compared to budget of 3350. Again, about 32%. So overall, reported sales were down about 11%. And just to remind you, what we talked about before, this is due to our conservation drought messaging. We did have Met had that pipeline repair earlier in the fiscal year where we had to shut down and ask everybody to stop using water for about a 2-week period. And then we do also include in here, there has been some blending of potable water with our recycled water. So there has been some use of potable water there. So just want to make you aware of that. So moving on to page 258, this is your sales for your recycled water. Again, we break this down between our refineries, our barrier and disinfectant tertiary. So you can see overall on the actual, we're at 16.2, so 16,200 compared to a budget of 17.3. So we're doing quite well. We're only under budget about 1,000 acre feet. We're doing better in the refineries as we looked at earlier today. Barrier, we're starting to catch up. We are under budget about 2,000 acre feet. Again, some of the reasons that we find ourselves in this situation, just as a reminder, we did have LA County was working on rehabbing the wells. And as a result of that, they have limited the amount of injection of both potable water and recycled water. And of course, we did have the county had that leaking valve a while ago. And so that caused some limitations as well. And as I mentioned earlier, we have supplemented some recycled potable water into the recycling system to the tune of about 670 acre feet. So moving on to page 259, this just gives you a little bit more breakdown on the actual recycled water sales. If you recall, we used to have a separate report that we would get into more detailed about the recycled water system. We've incorporated that with this report here. So again, we highlighted earlier that our refinery sales are doing well, and you can, if I can draw your attention to that third line item, which is your Chevron nitrification, you can see this is where we have exceeded budget. And you recall when we were going through the budget process, we had included about 1,900 acre feet in our potable sales because we anticipated a project where we would have to shut down the tank for the nitrification, and therefore we anticipated less on the recycle, but that hasn't happened, and so we are seeing those sales come through. Again, just on the barrier, we are lower than budget, which we had talked about earlier. So again, we are at 16,217 compared to a budget of 17,291. Then if I could draw your attention to page 261, this is now your operating expenditures. We saw the high level view that we were about $13.1 million under budget. And again, want to highlight the items that are causing that. We talked about the imported water sales being down. Well, that results in less imported water purchases. That's that direct pass through to Metropolitan Water District. So that accounts for about $6.8 million. Under the recycled operations, I'm going to probably hold off. I have another slide to get into a little bit more detail why that $3.5 million favorable variance is there. But the other item I just wanted to bring your attention to was down to the technical planning line item. You'll see we have a favorable variance about 2.1. And just as again, a reminder, when the board approved the budget, we did include for the West Basin's responsibility towards that MVR pilot project. And so that has not occurred yet through December. And then moving on to page 260. Excuse me, 262. Thank you, too. I shouldn't print back to back. I get confused here. Anyhow, so this is what I mentioned earlier on the $3.5 million favorable variance. You can see from this page, there's 4 areas I want to touch upon. One is the contract operations. We have, as of December, again, this includes December estimates, but through December, about 4.6 million in expenditures, and we had a budget about 5.4. So a favorable variance of about 760,000. This is primarily due to open positions at the Edward C. Lowell facility. Moving down to the next item, you'll see the utilities is below budget, is 600,000. We had a budget of almost 5.7 and we spent just under 5.1 million. This is a combination of the lower sales that we talked about earlier. That makes about 6% of it. And the other part is just the how we use power and what type of water we are producing. So Barrier water, as an example, takes more power to produce, and so we have less barrier sales, we're using less power. Moving down to the solids management, you'll see again, we are under budget about almost $600,000. That's a combination of, or I should say the favorable variance, it's a combination of the better water quality that we've been getting from Hyperion, as well as the production being down in some areas. And then last is our chemical line item. That's second to the last there at the bottom there. We have budget of almost 8.3 million versus actual spend about 7.4 million. Again, this variance is primarily due to less production, about 6%, and the remaining has to do again with the better water quality that we're not having to utilize so much of our chemicals.
But this also reflects the amended budget.
Thank you for reminding me. Yes, so these numbers do reflect the individual amendments that we made throughout the fiscal year. So it does reflect those additional dollars added to the budget.
Typically for the chemical prices going up.
Yes, that was anticipated. Yes. Thank you. All right, so moving on to page 264, this is your non-operating revenues. Nothing really exciting here other than to show that we are pretty much tracking on budget. You'll see our debt service is slightly favorable, and that's, you heard Margaret talk about the swap. Rates have been better, so we haven't been paying out as much of the swaps. We do have a favorable variance there. And then on page 265, we added this slide. This gives you a snapshot of where we are through December on our capital projects. Again, we grouped this between new infrastructure, the rehabilitation and replacements and other projects. As of December, we spent just a little over 8 million. We do have an annual budget of $45.6 million. Under the new infrastructure, most of those dollars are related to the JMM phase 2 expansion, the cathodic protection, and now of course we're starting off the PV pipeline. So all those are included in there. With the rehab, we're also below budget. And then under other projects, those would include like the Brewer desalter decommissioning, that's included in there, as well as some of the projects we have going on here at the headquarters. So all that's included as of December. And that concludes my report, unless you have any questions. Oh, I'm sorry. One more page, sorry about that. So part of the, what we normally talk about is where we think we're going to be at the end of the year. So we took a look at what our sales were, our expenses, and we tried to do a projection through the end of the fiscal year. On page 266, you'll see that we did a high level projection here. We are anticipating that our operating revenues will continue to be below budget due to the water sales that we've talked about. And then the operating expenses, we do anticipate those to continue to be below budget. And that gives us a net revenues of about 8.2 million compared to a budget of 6.4. And if the numbers are close to anything that we see here, we should have a debt ratio, coverage ratio of about 3.9 at the end of the year compared to a budget 1.39. Thank you. As compared to a budget of 1.3. Okay, that concludes my report. I'll be happy to answer any questions.
And maybe if I may, Mary Ann did a great job with the presentation, providing a very high level overview. Along with the director's request was a specific ask of having line item budget versus actuals. We're not intending to go over those details today, but the report that has been submitted is inclusive of very detailed reports. So maybe you could just kind of showcase some of that for the director's attention.
Sure. So beginning on page 245, you will see this is the more detailed budget versus actual on the recycling operations we just talked about. So this gives you a little deeper dive into the numbers that we looked at. Again, you can see this gives us a breakdown on our labor, benefits, overhead, in addition to, what we talked about earlier, the chemicals and some of the other costs in there. So this gives you, again, a little bit more information. Following on page 246, you will see again for the water policy and resource development, a little bit more information about where our budget is compared to our actuals. And that continues through page 252, which is our CIP projects. Again, tried to go through all the costs that we had to date. We had to estimate December, and this gives you a little bit more information by project, the individual projects and how the total gets to your $8 million as compared to the budget. But if there's any specific questions, I'd be happy to address those.
Okay, excellent. Thank you very much, Marianne. Any questions, Director Williams?
No, thank you. Very good report.
Any questions, Director Gray?
No, thank you.
And I don't have any questions at this time. I want to thank you for the presentation and what obviously was requested. And of course, it's in our packets posted publicly so everybody can see how we're doing so far this year. So I think that that's a very good thing. As well as we are seeing in real time, basically, how things are tracking, especially with changes in water sales, with the situation, when it came to shutting down wells for rehab along the coast, et cetera, et cetera. So I think it's really good. Obviously the board members can look at that. And if they have questions, they can reach out to staff and continue that. And I know, obviously, we're also getting ready to go into the budget cycle. So a lot of things to discuss going forward. Let me just grab my packet here, because I know we're on the tail end of this. I want to say thank you to staff for all your patience and good reports. And yes, a long meeting, but a lot of items. I mean, this is this time of year. It is what it is. You guys have a lot to bring to our attention at this time of year. So with that, we have no closed session.
Correct. And if I may, I would like to just maybe confirm the disposition of each of the info items. And so maybe I'll walk through those. So the first item, director installation ceremony, for the purposes of, the formal process, that'll just be a receive and file for the Monday board meeting. But of course, we're going to have a separate action item on Friday's workshop.
Yes, I don't know. Is that how we would do it? I mean,
Normally, these all would just go receive and file.
Yeah.
So I just want to walk through each one to make sure we are in agreement with how each of these info items will be handled. And so the first one, I think it'll be receive and file.
I see Margaret.
I was just going to comment, Greg, I think because you're having the special board meeting on Friday,
Yeah.
you could say that one is moved into the special board meeting on Friday and won't necessarily need to be reflected unless something comes out of Friday's meeting that you need to have it there. And maybe you do want to keep it as a placeholder for the Monday board meeting on the off chance some additional action needs to be taken on Monday. But
Okay, so that'll just move to Friday as an action calendar item.
unless, like you said, you want to keep it as a sort of a placeholder for potential action on the, but I'll defer to the chair on that.
Yeah, I think it's an odd one we got ourselves into here. So probably, well, number one, we're going to obviously talk about this at the Friday meeting as an action item. And then who knows what's going to come out of Monday with Friday with next direction. So you probably have to, number one, keep this as a placeholder on Monday agenda.
Okay, so we'll keep it as an info item, not a receive and file.
Yes.
Okay, very good. And this is why I'm trying to make sure that we're on the same page.
Yeah.
The second one, item B, clearly we talked about having that for a board discussion. So that'll remain an info item, not a receive and file.
Correct.
Okay. Third item, I believe, would be a receive and file, our monthly finance report.
Correct.
And then that brings us to our final item, which is the report that Marianne just gave, which I believe Director Alvarez has specifically asked for. And so that would go forward as an info item for discussion in the full board.
I think you could do just receive and file. And if he wants to pull it or something, right, he could pull it. Is that right?
That is the alternative.
We've talked about it here. And so, yeah, I think that, it doesn't need to stick around longer in a different way. Just keep it as or put it as a receive and file. And again, if he wants to pull it for something, we can do that. Yeah.
Got it. Okay.
Does that seem right?
Seems right.
Oh, yeah, you're the chair, so.
Okay.
Okay.
Good. All right. Thank you. Thank you. So item number 7, no closed session. Item number 8, director comments and future agenda items. I'll start with Director Williams.
Yeah, thank you very much. I have no comments. Great meeting other than. Thanks.
Excellent. Thank you, Director Williams. Director Gray.
Good discussion, great reports, and thank you very much to staff and everyone.
Excellent. Thank you. And I want to echo that in the sense of staff. Really, again, appreciate all the work put into it, all the time you take, lots of questions from us, and being flexible with, the direction and so on and so forth, and the feedback. The only thing I wanted to make sure I understand, and it looks like it's been moving around a little bit, is between the Friday and Saturday board meetings, that now it looks like a Friday meeting is combined into one meeting, and Saturday is canceled. So let's talk about, Friday, we're gonna have a special meeting, and what's gonna be on that agenda?
So we'll have 3 items on the agenda, 2 open and 1 closed.
Okay.
The 2 open items will be the swearing in celebration event that we talked about today.
Okay.
It'll be an action calendar item. And then we'll have a discussion around diversity, equity, inclusion, and accessibility. That'll be the workshop portion. So that'll be an info item for board discussion. And then finally, the closed session will be on the request for proposals that were received for general counsel services for the district. So the board will go into closed session on that item.
And that's gonna be here at this building, correct?
It'll be right here in this room. That's correct.
What time?
I believe we're starting at 9 a.m. We will have continental breakfast available at 8 o'clock. We'll convene the meeting at 9.
Originally, it was gonna be 2 meetings on Friday. Now it's 1 meeting, and the meeting that was gonna be on Saturday has been canceled. So we're gonna look at future dates for that one. I will just put out that the following Saturday, I'm available.
Okay.
If, when staff starts working on that. But maybe we can talk about that on Friday and get the other directors, or you guys are gonna make phone calls to board members, of course, but next Saturday could work for me.
Okay, fantastic.
And one last item I think on this is the DEI workshop. Now I understand it's geared toward the board, or is this, geared toward the organization as a whole? What exactly are we gonna be, what's the presentation or the discussion as you envision it on Friday?
Right. So you may recall I believe it was the October water policy and ledge meeting. At that time, we were considering a certain consulting contract. And at that time, Director Gray and Director Williams had asked a few questions, and some comments were made around the importance of diversity, equity, and inclusion to West Basin, and ensuring that we're embracing DEI principles throughout the organization. And so the question was posed to the general manager and the directive to come back to water policy for a discussion around that. So we did, and we brought forward a colleague from LA Department of Water and Power, and we had the discussion, I believe it was in the November water policy and ledge meeting, but not all the board members were present. So the chair of water policy, Director Gray, recommended we discontinue the conversation at that point and then have this as a workshop rather than trying to squeeze it into a standing committee or squeeze it into a regular board session. So that's where we are now, is to have the requested workshop. And so with that said, now focusing in on your question, the discussion is for the board to consider what are the opportunities for ensuring that we're maximizing DEI throughout the organization, as maybe Director Gray had indicated. And so we'll talk about, those opportunities. The board, this is really meant to be a discussion with the board. Although we do have the same presenter from LADWP coming in to provide, that same presentation. I believe you were there at the time, so you may recall that presentation. And then I have a PowerPoint of my own which I did not have a PowerPoint for the prior water policy and ledge meeting, but I will present, a short opening, and we'll have a conversation around that along with the presentation from my colleague from LA Department of Water and Power. So again, it's really meant to have a conversation with the board around DEI and what we see as the opportunities to really embrace DEI throughout our organization.
Because it is a Friday, and so I don't know how many of the staff are like working that day, if you will, but it's a public meeting.
It is a public
So
meeting.
staff, I assume, will probably either be here and or online. It's not just for the board.
Correct. Yeah. In fact, Michelle Green is our DEI committee chair. And so she and I talked about that very, I think what you're alluding to. And so she suggested to invite staff to participate, in particular, our staff-led DEI committee. So that way they can be on hand to observe, perhaps participate in the conversation.
I wanted to ask about and ensure that it wasn't just a conversation for the board only per se, but hopefully our staff was able to at least number one, observe, let alone engage potentially, and or if we have, any conversation, we can have that as a collective. So that's good.
Yeah, and I think just extending what your remarks there, perhaps our management team can also be involved in the conversation as well, as our leaders of the organization.
Remember, you all want to run it, but I just wanted to understand that it wasn't just the board only.
Correct.
That,
It's an organizational discussion. Yeah,
good.
I think that's a really good concept.
Workshop, so that's excellent. Okay, good. All right. Well, I know it's been a long day, a long meeting. I appreciate everybody, including my colleagues who, are still here with me. And let's see, for what it's worth, we have this special board meeting on Friday at 9 o'clock here at the ELD building. I think you said the agenda will be posted later today, in preparation for Friday. And with that, the next scheduled meeting of this committee is on February 15th, 2023. That's what this says. And with that, we also have our board meeting, of course, this coming Monday. So a lot on the table in the next handful of days. So with that, we are adjourned. Thank you.
Thank you.